Good morning, everybody. Welcome back to another episode of The Market Open. It is Tuesday, October 14th, and we are live. We got a red pre-market, folks. We got a red pre-market. Unfortunately, we have some new updates in the China-US debacle, which quite frankly doesn't seem like it's that big of a deal, but it's enough of a deal that's causing red in the pre-markets. And so we're going to start off with discussing what's going on there, what are the ramifications, kind of how do we think it plays out. But if you're looking at your portfolio in the pre-markets, you likely are red. Now, the banks, today is the start of bank earnings. They all crushed. We're going to talk about the banks, but when I mean they crushed, they demolished earnings on the top and the bottom. They crushed revenue, EPS. They really did have a phenomenal earnings. None of those banks, even their stock, I think Citibank's up like 1%. Most of their stocks are flat because of this whole China issue. So again, the China issue seems to be cascading the entire market and essentially putting a cloud on any good results that we could be getting. And so, yeah, the VIX is up. China issues. That is why, I woke up at 4 a.m. I went back to sleep, but I woke up at 4 a.m. and I just looked at my phone and it was like bloody red. It's way better than what it was at 4 a.m. But it's once again continuing to be in this same issue. And as a result, that's why we're having some problems. So we'll talk about that. We'll talk about China. We got a bunch of different earnings to cover. We have a bunch of different AI headlines to cover. A lot more strategic investments by the hyperscalers into AI. AMD is up in the pre-markets because Oracle is going to be using 50,000 more of their chips. Jensen hand-delivered some new chips to Elon yesterday. So we have a lot of stuff to talk about in the context of what's going on in the broader AI ecosystem. We also have a bunch of quotes by the Larry Finks and the Jamie Dimons of the world, the people that run some of the most important financial institutions. They talked about stablecoins, valuations, crypto, all that stuff. So we'll get into everything. But I think let's start off with China. And let's see what we got going on. Oh, Bitcoin and Ethereum as well. By the way, we're going to use Webull today because Legend's being kind of weird and it's not really showing the charts as easily. So once it fixes, we'll go back to Legend. But as you can see, Ethereum right here, 39.44. That's back below 4,000. And Bitcoin at 110. Now, real quick, before we get into the China situation, Jerome Powell will be speaking today at 12:20 as well. The guy who shorted Bitcoin and Ethereum, he shorted about $1.2 billion of Bitcoin and Ethereum 30 minutes before Trump made the China tweet. So more likely than not, he probably knew there was a tweet coming to short $1 billion worth of crypto. He made $200 million of profit on it. He now has a $400 million short, the same wallet, the same blockchain address on about 500 million of Bitcoin. I'll get the exact numbers in a second, but he is once again short Bitcoin and he started going short at 116K. His liquidation price is 126. So as long as Bitcoin is not at 126, he won't be liquidated, but he's already up. I think it's about 40 million on the short because Bitcoin's down from 116 to 110. So you do have some people that still don't believe that crypto is going to be able to rally even with the Trump-China pivot. And maybe it's because there isn't a Trump-China pivot based on some of the updates we got today. So let's look at this right here. This is the headline for why stocks are red in the pre-market. Reuters is reporting that Chinese rare earth magnet exporters have faced tighter scrutiny on export license approval since September, weeks before Beijing expanded rare earth export controls. This is likely what Trump was referring to when he talked about all these letters that are going out that are hurting a bunch of these different countries that are trying to get rare earth minerals and metals. Sources said applications are increasingly being returned for additional information, with approvals taking longer, though still within the Commerce Ministry's 45 business day window. The scrutiny level is similar to April, during the height of the US-China trade tensions, when license delays caused magnet shortages for automakers, which is obviously not good for the auto market. China's rare earth exports fell 31% in September, and foreign clients are now rushing to ship orders before new rules take effect on November 8th. The EU Chamber of Commerce said member concerns remain high over licensing delays and lack of clarity of approvals. So essentially, you've got this rare earth export control / ban, whatever you want to call it, that China is engaging in, but also kind of not engaging in. And it's creating a lot of different issues across the board. What did Bessent say this morning? He said this is a sign of how weak their economy is, and they want to pull everyone else down with them. Maybe there is some Leninist business model where hurting your customers is a good idea, but they are the largest supplier to the world, supplier of rare earths. If they want to slow down the global economy, they will be hurt the most. They are in the middle of a recession and depression. They are trying to export their way out of it. The problem is they're exacerbating their standing in the world. He said that today to the Financial Times. So as a result, as JN says, how does that affect SoFi? Well, it doesn't really affect SoFi. It doesn't really affect a lot of companies, to be honest. But obviously, if the entire market's going to take a hit because the China algos or the China situation gets worse, then algos are going to do what algos do. And as a result, you've got SoFi that is down 2.4% in the pre-markets. This is definitely annoying. This is definitely annoying because yesterday we had $800 billion of market capitalization added to the S&P. We had a lot of dip buyers step in. You had a lot of stocks, I mean, quite literally explode yesterday to the upside. The nuclear stocks literally went nuclear. Oklo, which is down in the pre-markets, but it's only down 1%. It was up 16% yesterday. Broadcom, that OpenAI deal obviously was massive, and that was a tailwind for the broader AI industry. Navitas, massive deal with NVIDIA. That's up 31% in the pre-market. So some of those stocks aren't being affected too much, but the S&P 500 is down 1%. That's not a good thing for the S&P. Iran, by the way, got a $100 upgrade from Cantor Fitzgerald. Super bullish for Iran. Again, Iran is up, S&P is down. So I'm going to be very curious when the market opens if this China issue is cascading enough to create weakness across all the sectors that have been able to hold on tight. Energy fuels, that's up 14% in the pre-market after being up 16% yesterday. MP, that's up 6% after being up 21% yesterday. At the same time, Amazon is down, Meta is down, Google is down, USAR, rare earth minerals, that's up 11.8% after being up 18% yesterday. It's almost like safety is in rare earths and nuclear stocks, even though, you know, the market kind of going down probably affects all of them. A lot of them don't really have revenue or earnings, but the perception is that they are in the industries that matter. And as a result, they're catching a bid. And you can't blame the market for having that perception. I mean, if China's not going to be as friendly when it comes to exports on rare earths, you're going to have to imagine more demand goes to domestic manufacturing of it. So the MPs of the world will likely catch a bid. And as a result, that's why they are acting as a form of safety right now. Let me check gold. I didn't check gold this morning. Gold right now is actually down. It's down 0.2%, not down a lot, but it is down. So you're seeing this China issue kind of take down commodities along with crypto, along with the stock market. Yeah, even gold is falling throughout the entire set of equities that we have. The bond markets are open today. Remember, yesterday, credit markets were closed for Columbus Day, so we will have a lot more money entering into the system. The 10-year is actually down, which is nice, 4.026%. Stocks falling tend to be a little bit of a reason for the market to pile into bonds, and so it's not horrible to see that. If that comes below 3%, that would be nice. But regardless, that is the reason why we are red in the pre-markets. Now, what is my take on this? Again, I don't think we have enough data to understand how intense this argument around rare earth metals is going to be with China in the US. But based on what Trump said on Sunday, which is don't worry, it's going to be fine. And then based on, I guess you could say, a bit more escalation by China this morning, maybe it's going to be fine, but it's not going to be fine overnight. This is not the April V-shape automatically. Trump says good time to buy, and then boom, things go back to normal, which, by the way, it took a couple months for things to go back to absolute normal. I mean, the S&P went from 4,800 to like 5,300 or 5,500, but it didn't get back up to that 6,000 range that we were at in January for a couple months. And so maybe it's going to take till the end of the year for this to recover. Maybe this ends up blowing over the next couple of weeks. You know, maybe that Trump tweets something out saying, hey, I've negotiated a deal with China. I mean, Trump will be meeting with China in Korea in about a week, and they are still scheduled to have their meeting. Dissent, Vance, and Trump confirmed that they are still having the meeting, even though Trump said he wasn't going to have the meeting, but they're still going to have it. Maybe that's when this is resolved. But right now, I think we don't know. And so if you buy the dip, you buy the dip, but you're probably buying the dip. Bitmine right here down 6% because Ethereum got hit. You're buying the dip, likely not knowing exactly what the ramifications are going to be of China and the US. And you're just going to have to buy, if you do buy, knowing that that is an unknown that is out there. So we're going to see. We're going to see what ends up playing out. But nonetheless, that is the reason for why the pre-markets are red. Oil is down. Well, oil has been going down for a while. Wow, down another 2% today. I don't think oil down is a sign of recession. I just think the entire market is a little bit wonky here in regards to this China-US thing. Because I think most people thought it was over Sunday night when Trump said, hey, everything's fine, don't worry. I guess everything's not fine based on this pre-market action and what China did overnight. But regardless, that is hurting a lot of different stocks that we've got going on. Again, long-term, I don't think this is that big of a deal. I mean, at the end of the day, these are egos going back and forth. I don't think China is decoupling from the United States. China's foreign ministry, even on Saturday night, literally said, we don't want to get into a trade war. We don't want to fight with the United States. We want to take things in a very precautious way. So I think this will be resolved. It might just take more time. And if it takes more time, that means you're likely going to have more opportunities to potentially be able to get into this dip. Now, some of the banks that might give you a dip today based on this China news might be warranted to take a look at. Let's transition to bank earnings. I mean, folks, we've been talking for the past couple of weeks that we need a good bank earnings We need the JP Morgans, the BlackRocks, the Wells Fargos, the Citis to execute. And boy, did they execute. I mean, this is incredible. JP Morgan beat on the top and the bottom, 507 EPS versus 487, 46.3 billion versus 45 billion. BlackRock, 1155 versus 1131 EPS, 650 versus 629 revenues. Citi, 224 versus 172. That's a 30% beat on EPS. That's like a tech company beating on EPS by 30%. I mean, that's incredible. 22 billion versus 21.1 billion, $900 million beat on revenues. Goldman Sachs, dollar beat on EPS, 1225 versus 1109, 15.1 versus 14.2 on revenue. And then Wells Fargo, 160 versus 155, 21.4 versus 21.1. All the important banks, and we've got more banks coming up over the next coming days, but these are some of the most important. JP Morgan, BlackRock now managing 13.5 trillion in assets. It was 12 trillion a couple months ago. It goes to show how much these companies are doing what they have to do. And it also makes it pretty bullish for SoFi. I mean, if all the banks are crushing, and these are legacy banks, you would imagine SoFi, which is growing way faster than a lot of those banks, are probably going to be able to put up some good numbers. BlackRock right here, down about 0.5% in the pre-markets. JP Morgan, that's down about 1%. Wells Fargo, that's actually up 3.8%. So the market liked Wells Fargo's earnings the most. Citi, that's also up about 0.5%. And the last one that we had was Goldman Sachs, which is up 30% for the year. I think that one was flat in the pre-markets. Goldman Sachs, yeah, that's down about 2.4%. Not bad. The banks are doing their thing. They need to keep doing their thing. As long as the banks continue to do their thing, then it's going to be very, very important. Now, there's a lot of nuance to the bank earnings, especially credit provision losses and all that stuff, and we'll go through that over the coming days. I really have not a chance to look at every single bank earnings and all their financials, but these headline numbers at least show us that they're doing their thing, and that at its core, the top line and bottom line of the businesses are not struggling, even if there might be certain components of it that are struggling, and we'll get more details around it. But the banks are putting up the numbers that they need to put up. Now, BlackRock CEO Larry Fink, he had a couple quotes that were also really important. Number one, he said more than 4.5 trillion in value is currently held in digital assets across crypto, stablecoins, and tokenized assets, and he expects the market to expand rapidly. Again, BlackRock did institutionalize Bitcoin and Ethereum with the first ETFs a year ago, and so obviously he does have an incentive to be excited around what's going on with the crypto ecosystem. And then take a look at what he said right here about data centers. This was on the earnings call in the morning. There are significant opportunities for us ahead of the data center space. An estimated 1.5 trillion of capital is going to be needed in the next 5 years in just the core and the shell of data centers, and that's not including the chips. The growth of cloud computing and AI are propelling this capital demand, and BlackRock is well positioned to expand our leadership. Teams across BlackRock are exploring how AI can play a bigger role in making markets more accessible and efficient. We see a future commercial opportunity in using tokenization to further bridge the gap between traditional capital markets and the growing digital asset space. AKA BlackRock is going to tokenize real estate. They're going to tokenize all the private products that the wealthier clients have access to, and they are going to provide that liquidity for retail. Now, does that mean those products are amazing to invest in? It depends on the nature of those products, but the opportunity to invest in those products via the blockchain, it seems like it's coming. And as a result, it doesn't look like these banks kind of missed the ball on these earnings. Domino's also had earnings. I actually didn't look at Domino's numbers, so let's pull those up together. Papa John's got a buyout offer from Apollo, which is a private equity firm, yesterday for $60 a share. That stock's at like 45, so market doesn't fully believe that buyout will go through. But if you do think it'll go through, then maybe there's a $60 buyout. Domino's is up in the pre-market. Earnings were a beat on the top and the bottom. 3% EPS, 408 versus 396, 1.14 billion versus 1.14. That's a small beat by 1%. Revenue's up 6% year over year. EPS is down 3% year over year. Domino's is up 3%. Not bad. Not bad. So every company that reported, even J&J, beat on the top and the bottom. I think their stock was slightly flat. J&J, yeah, down about 1%. But pharmaceuticals, banks, pizza companies, all of them showing some decent results, which is not too bad. Now, transitioning to some of the AI news, the big AI news this morning, AMD up 1.77%. Why is AMD up? Oracle today announces that they are going to be deploying 50,000 of the MI450 AI chips inside of their data centers. And AMD continues to get some good news. So AMD and Oracle announced agreement for 50,000 GPU deals for its Oracle Cloud infrastructure. Like the OpenAI deal, AMD will provide Oracle with its future MI450 AI chip in the second half of 2026. So a lot of this stuff will likely pop up in the earnings in Q3, Q4 2026. Maybe some of it's pulled forward in the beginning of the year, but a lot of the growth you should expect towards the end of 2026. And obviously the deal is going to increase the presence that AMD has, not only with OpenAI, but now with Oracle. Oracle has a very strong relationship with OpenAI. So there's a lot of synergies between them working together. And it would make sense for this deal to play out. So we're getting more and more evidence that a lot of these customers and clients and vendors are working with each other to facilitate what needs to be done in AI. And speaking of delivering AI chips, here is what NVIDIA said. To celebrate DGX Spark shipping worldwide starting Wednesday, our CEO, Jensen Huang, just hand-delivered some of the first units to Elon Musk, chief engineer at SpaceX. The exchange was a connection to the new desktop AI supercomputer's origin, the NVIDIA DGX-1 supercomputer, as Musk was among the team that received the first DGX from Huang in 2016. And as you can see right there, you have Elon and Jensen getting that chip. This was cool to see. Obviously, Jensen is making the rounds and delivering chips to a lot of the different customers that are beginning to get those new versions of chips, especially the Jetson Thor, which is the robotics chip as well that's coming up. And as a result, you're seeing that with Elon. Elon also had a nice little moment yesterday as he crashed the SpaceX live stream that was happening as they were getting ready for a new launch.
And we've got a special guest here.
What the?
We're live.
What's up, guys?
How's it going? Good to see you, boss.
Hi.
Hey. How's the workout?
Good. We're live right now.
What the?
Yeah. Getting ready for Flight
Wanna say
11. How are you feeling for it?
Good. This is the first time that I'm going to be actually outside standing and watching the rocket. Because normally I'm in mission control and stuff.
Okay. Yeah.
But now I'll be standing out in the garden there.
Okay.
So
Awesome.
it's really going to be much more visceral.
Yeah. You're gonna feel
Great
it.
place
It's
to
gonna
watch.
be. It's gonna be. It's gonna be awesome.
All
We'll be in here this time, but usually we're out there watching. Yeah.
right, sounds good.
Good luck.
Later.
And have fun.
Have fun. Nice.
Dude, imagine Elon's your boss and you're like trying to do your work and he just like barges in. Like that'd be so crazy. That'd be so cool. But yeah, as you can see, Elon was having fun. He was excited. The Starship launch was a successful flight. And so overall, I think Elon's feeling pretty good about kind of the trajectory of SpaceX. And given that they got this new chip from Jensen, you know, they have a lot more progress that they're going to be making in SpaceX as well. Ironically, OpenAI is worth more than SpaceX on the private markets at 500 billion. OpenAI or SpaceX is, I think, is like 400 or 450. But both of those companies making some pretty strong progress across the board. So that's what we have with Mr. Elon and some updates on chips. Now, going with this AI trend, Sundar, CEO of Google, tweeted today that it is great to speak with the Indian Prime Minister to share our plans for the first ever Google AI Hub, a landmark development. This hub combines gigawatt scale compute capacity, a new international subsea gateway, and large scale energy infrastructure. Though it will bring our industry leading technology to enterprises and users in India, accelerating AI innovation and driving growth across the country. They also committed to 15 billion of investments in AI, specifically for data centers in India. So you've got a lot of the hyperscalers just recognizing, hey, if we're going to invest, we got to invest across the entire world. This is an updated chart of CapEx. We take a look at this pretty much every week. And as you can see right here, in updated dollars, if you believe some of the more aggressive estimates, calendar year 2027 will be spending 543 billion just across the main five: Meta, Oracle, Google, Microsoft, and Amazon. I did buy some more Amazon yesterday as well. I still think Amazon is just getting disrespected. So bought some more Amazon yesterday, but 543 billion in calendar year 2027. Again, Jensen thinks 3 to 4 trillion will be spent by the end of the decade. And, you know, based on all these deals that we're getting with OpenAI and Broadcom and AMD, like it doesn't seem like it's necessarily slowing down. And if it continues to not slow down, then you're probably going to see more and more excitement from the ecosystem of CapEx. And as a result, you know, a lot of the third-party beneficiaries, like an Iran, like a Nebius, like a CoreWeave, they're going to benefit. And that's what we are seeing right now as well. Ray, thank you for the super chat. Speaking of Iran, what's going on with Iran? When is it going to stop going up? Should I buy right now? So this is a good question. I think it'll give us a little bit of a tangent for a couple minutes that we can talk about this concept that we talked about on the Tech Bros podcast yesterday, which I do think is important to bring up because I know everyone's probably navigating this feeling right now, which is, what do I do with FOMO? Because your super chat right there, Ray, is a pure question of FOMO, right? Like literally your question is, when is Iran going to stop going up and should I buy now? And it's a fair question, right? It's a question I think that a lot of us have asked. I think the approach to this question, to sort of philosophically create a framework for an answer, which by the way, the reason Iran is going up is they got a $100 price upgrade by Cantor Fitzgerald. The upgrade essentially focused on the idea that their GPUs are going to be more utilized than other Bitcoin miners that turn into AI HPC pivots. And as a result, they're going to get more deals. And as a result, they're going to get more revenue. And they're pulling forward that growth. That's why you get a $100 price target. I think Bernstein has a $75 price target. So you do have some people on the street that have higher price targets on IREN. Look, I think the question is really simple. Do you want to take the risk? Do you want to take the risk towards the end of the year? I've kind of come to the conclusion over the past couple of weeks, especially after we had that whole Friday meltdown, which is like, are you happy with your year-to-date performance? And if you're happy with your year-to-date performance, if you think of yourself as a fund manager, even if you're a retail investor, which I think it's important for all of us to kind of have that frame of mind, you have a benchmark, which is the S&P 500. And theoretically, you should be beating that benchmark, or else you should be investing in the S&P 500. So if you beat that benchmark, and I know based on many of the comments that I've seen in the chat, even if your year-to-dates are not as good as they were last week before the whole China situation, I mean, we're all pretty much beating the S&P 500. So then the question becomes, do you want to take on more risk? And I think towards the end of the year, it's really hard to navigate it, or one could argue it's really easy to navigate it, because in these last 3 months, you have to ask yourself, am I going into IREN for a trade, or do I believe IREN is a multi-bagger over the next 5 years? And at 64, I think it's a great price. And realistically, I think a lot of the positions for new portfolio additions, it's okay to delay those until 2026, because you have so many things that can happen over the next couple months. You have your own tax planning that you have to do. That probably implicates, how much dry powder you have. And then number two is like, every year there's a stock market sell-off of at least 10%. Since 1950, there has been one 10% sell-off every single year. Even in 2024, we got it with the yen carry trade. We almost didn't get it, but then we got it with the yen carry trade. And so are you confident there's not going to be a better opportunity to pick up IREN, or to pick up Hood, or to pick up AMD, or pick up SoFi in 2026? And that comes down to, how much do you know the company? How much do you know the company? And if you're asking, hey, should I buy IREN because it keeps going up, you probably don't know the company that well, right? And as a result, if it goes down because you buy it, you're going to be really pissed off that you bought it, because you don't even know why you bought it in the first place. So I think the way to handle FOMO right now is, if you want to take some swing trades, then take some swing trades, but YOLOing into Oklo right here, unless you are fully confident that Oklo goes higher and you're fully ready to buy the dip on Oklo. And I don't know how many people would buy a 15% dip on Oklo, because a 15% dip would still have the stock up more than 6x this year alone. You have to be, mentally confident with the way you come to that conclusion. Like SMCI, for example, I'm not a big SMCI guy, but I took a trade on SMCI. SMCI right there down 1.39%. Is that a little bit of a FOMO trade? I mean, maybe it's a leap into 2027. And my logic is that, hey, if GPUs are increasing at the level that they're increasing with AMD and NVIDIA, then obviously there's going to need to be liquid cooling technology. I'm not the biggest fan of the company, but I do think there's a world in which this stock, which hasn't moved much since Liberation Day, makes a move. And so that's a bit of a trade. And it is what it is, right? It's not a heavy position. If it goes to zero, it's going to be okay. I'm ready to DCA into it, but I'm comfortable with the psychology of it. Am I ready to buy Oklo at 170 because it keeps going up 10% on the day? No, because I'm not going to be able to sleep all night. And I think that's the most important thing. The SMCI strikes are 60 and 90. 60 and 90 on SMCI for January 2027. So it's a call debit spread. So simply put, at the end of the day, do you want to FOMO into something towards the end of the year and take on the risk? If the answer is no, then I think you just don't worry about seeing these screenshots where people are making a gajillion% on options on some random stock that's blowing up that you don't even understand what the company does, because it's a toxic mentality, and you're just not going to be able to sleep at night. And I guess that's how I'm navigating not YOLOing into some of these tickers. Was there SMCI news you guys are saying? Was there something for SMCI? Supermicro launches new business line in data center building block solutions. Oh, you do see a little spike on the chart. Yeah. There's a little green candle right there, recovering now. Yeah, I mean, look, I'm not the biggest SMCI bull. I just think like it's going to naturally grow, even if their margins aren't the best with AMD and NVIDIA shipping all these GPUs. But does that mean I'm YOLOing into Rigetti? That's up 6,000% over the past year. I mean, venture capitalists is up another 1% in the pre-market. Venture capitalists spend their entire career looking for a 6,000% gain. They invest in hundreds of startups that are going to go to zero to find the one company that might become the next Meta. And in the public markets, Rigetti has given you a 6,000% gain. All the quantum stocks, quite frankly, are up more than 3,000 to 4,000% over the past year. So, like, congratulations to the people that got in them. But if you're asking yourself right now on October 14th, do I buy into Rigetti because it just keeps going up? after it's up 6,000%. It is a personal choice where you have to come to the conclusion for the downside of maybe it doesn't keep going up because it's up 6,000%, or the additional risk of, hey, if it goes to 70, I'm going to look like a genius because I hopped on the bandwagon. But I don't think it's worth losing sleep overnight, especially when all of us have done pretty damn well picking 3 to 4 stocks that we went pretty much all in on, whether it was a Rocket Lab, a SoFi, Robinhood, Palantir, whatever it was, and those have worked out really well throughout the year. Especially since most of us bought the dip in April. I mean, most of us did the hard part to get the outperformance that it takes to like survive in this market, which is buying the dip when it's not easy to buy the dip. We did the hard part. So now I really do think, people are getting greedy, including myself. Of course, there's little moments of like, hey, could I, inch out a little bit more money on this trade that I see going up? But if you already did the hard part, if you're already beating the S&P, if you already bought the dip when it was unpopular to buy the dip, you won. And I think now you just try to keep winning without taking on as much risk that makes it hard for you to sleep at night. So that's what we got in the context of FOMO. Amit, what are your thoughts on AMKR paying a dividend? It's not that big of a deal. Ultimately, AMKR is looking for a doubling in revenue. That is my thesis on them. And if they can double revenue over the next 8 to 12 months, then I think the stock is closer to $50. So yeah, I know the growth is not there yet. That's kind of the point of buying right now. You want to buy when the sales multiple is low before the growth comes in. And then the DD on the company is what tells you if you believe the growth is going to come in. But again, it's cheap. That's why I like it right here. My downside, I think, is rather limited because I know they're going to grow. And if the multiple doesn't expand, okay, the stock doesn't give me that much of outperformance, but I don't think the stock's necessarily going to collapse or the multiple is going to compress because there's not that much of a multiple in the first place. So the risk that you're taking is just, not as high as some of the other stocks that are out there. Palantir. So we haven't talked about Palantir in a bit because there hasn't been too much news, but we do have some updates on Palantir. Number one, they got an upgrade today to 201 from 182. Piper Sandler, $200 price target. Analyst says there is no argument that Palantir's valuation leaves no margin for error, particularly if any signs of moderating growth emerge. So the analyst is kind of acknowledging, hey, Palantir likely is expensive right here and that, they have to execute at a very high level. However, we argue that with tremendous visibility on future revenue, over $7 billion of defined contract value plus an estimated $4 billion of future contract value, accelerating triple-digit growth in commercial bookings year to date, and an unparalleled wallet share opportunity across $1 trillion of U.S. defense spending, which could allow Palantir to 2 to 3x its current government business and still be 10x smaller than its largest defense primes. Palantir has not reached peak growth yet. And as a result, Palantir is still down in the pre-markets, but is getting its second upgrade, or I think it's its third upgrade on the street, to $200 from Piper Sandler. For those that are just joining, if you rewind to the beginning of the first 10 minutes of the show, you'll find out why the pre-markets are red. Again, the China export controls continue to escalate with the United States in terms of trade tensions. That is the number one reason, for my understanding, for why the stock is, or why all stocks are red, even with good earnings across the board with these banks. And we'll talk more about it, but we spent some time on it in the beginning of the show. It looks like the China saga is not complete. And that is why you're getting some pain in the pre-markets. Now, outside of the Palantir upgrade, Iliano, our boy who launched the merch store, he did a pop-up in South Korea. And I mean, this thing is just pretty incredible. For those that haven't seen the video on this, there was 500 people in line across the block, as you can see right here, for this Palantir shop up in Seoul. So pretty incredible. I mean, look at those people across the block. They sold out within like 30 minutes. And there's the Palantir pop-up right there. And it's super cool. Super freaking cool. So shout out to Iliano bringing that worldwide. For those that are watching from Seoul, I'm sure that was super cool to experience. And we even had Karp, who made an appearance at the event. And this is a nice little video of him there at the event.
Yeah. So in any case, and well, thank you for your service. Thank you. My hat. Thank you. Well, actually, this is. Oh, you want a Palantir hat? This is. Oh, we need a Palantir hat. Sorry, actually, this is my personal hat. There's a Palantir. Thank you so much. Yeah. Wow. Crazy.
Super cool, dude. Super cool. So a pop-up is basically like when a clothing store does a one-off drop inside of a new location. And so like, even if the actual store doesn't have a physical location there, they like dress up another store as their brand, their location, and they do a pop-up and they sell a limited amount of merch. So it was really cool. If you're in Seoul, this was a great experience to get to see Karp in the flesh and get to actually witness the Palantir brand right there. And I hope Iliano does this in a lot more countries across the world, because it would obviously be really cool to just have the brand go as international as it is. So those are the two updates on Palantir. By the way, Piper Sandler increased the price target on Palantir. They also increased their price target on Robinhood. I'm just seeing this right now to 155. Wow. They increased it to 140 last week from 125. So 125 to 140 to 140. And today they are increasing it from 140 to 150. The news on Robinhood yesterday was that their head of futures said that they are open. They gave this quote to Reuters. They are open to finding new acquisitions in the prediction market space. So Kalshi just raised at $5 billion. Polymarket just raised at $10 billion. It looks like Robinhood is more likely to think of potentially acquiring some of these companies that are in the prediction market space and kind of bringing them in-house. It looks like this is going to be a $400 to $500 million opportunity for them every single year in revenue. Eventually, it will be a $1 billion opportunity as it grows. But prediction markets continue to be one of the assets that helps diversify Robinhood. And it looks like it's increasing the earnings estimates on Robinhood as well. Walmart partners with OpenAI. Why not? Because if you just say OpenAI, your stock goes up. Walmart, look at that, 3% move. Walmart partners with OpenAI to create AI-first shopping experiences. Okay. Well, there you go. Walmart's green. And then Michelle Bowman of the Fed says she continues to see 2 more rate cuts before the end of the year. Yeah, I don't think there's any doubt in my mind we're going to get those 2 rate cuts, especially because the government is not shut down. By the way, Trump hinted yesterday that the government shutdown might be way longer than expected. He was on Air Force One and he was talking to reporters, and basically he said, look, if we have to continue to be shut down, we're going to continue to be shut down. We're going to make sure that all of our men and women who serve in the United States military and army get paid, but we are not going to capitulate to, I'm kind of paraphrasing what he said, but he basically said we're not going to capitulate to what the Democrats had to say around healthcare. So Kalshi has the odds at around 30% that the shutdown will last higher than 35 days, which was the longest shutdown back in 2018. The fact that Trump had a shutdown that went a month before, I mean, he's probably not afraid to do it again. Markets aren't affected too much by that, but eventually markets will be affected if people aren't getting paid for their jobs in the federal government. So that is one thing that we have to look out for, but government seems like it will continue to be shut down. Walmart right there getting that 2% move from OpenAI. So that is what we've got. White House Budget Office preparing to batten down hatches. Yeah, this is exactly, and ride out the shutdown will pay troops and law enforcement continue layoffs. Yeah, exactly. This is what Trump said yesterday, and this is what the Budget Office is saying this morning, basically signaling they're not afraid to continue the shutdown. And I guess we're going to see how the market ultimately reacts to that. So that's what we've got. Again, if you're just joining, the big headline this morning, unfortunately, is that China is ramping up their export controls on rare earth metals. And as a result, that is creating a lot more of an issue. The markets don't know exactly how to navigate that, but their immediate response is red versus green. We'll do a poll in the chat right here of how many people think we can actually end out green for the day. S&P is down 1%. It's a sizable move in the pre-markets to be down. We did recover 1.5% yesterday, so we're giving back about 70% of what we recovered yesterday. And it seems like it's based on this China stuff. Grab is down pre-markets as well. I think that's more algos. Grab is at the same price it was at on Friday. So a lot of these stocks are kind of getting to that same price they were at on Friday based on what's going on with China. Now, there is one update on Grab. They are going to avoid a $21 million fine, which is actually really good. They were going to get a fine from the Federal Court of Malaysia's Competition Commission for violating antitrust laws. And the 3-judge panel denied giving them the fine because they basically said, I'll put the post right here in the chat, but they basically said, we don't need to fine them because they didn't have that big of a violation. So, I mean, that's $21 million they're saving for the next quarter for a company that's not that profitable. Every dollar matters. But regardless, the stock's going to get hit based on these algos taking it down. So that is what we've got. Okay, ARM is up 2%. So last night, I mean, again, this gravy train of OpenAI, ARM partnered with none other than OpenAI, because why not? And that's why ARM got a move. It was up, actually, it's only up 2% right. It was up 8% yesterday. It's only up 2%. Yeah, it's okay. So it lost a lot of its mojo. It was at 192 yesterday. OpenAI is teaming up with SoftBank's ARM to design a CPU that will work alongside its upcoming Broadcom-built chip. The ARM CPU is intended to handle more general computing tasks in tandem with GPUs, while the OpenAI Broadcom chip will focus on AI inference workloads. And basically, the thesis of this partnership is that SoftBank owns a ton of ARM, 90% of it. SoftBank owns a ton of OpenAI. They've invested, I think, $10 to $15 billion. They're wanting to invest more in OpenAI. In fact, SoftBank, if anyone saw the headlines, SoftBank went to global banks to get a margin loan to buy more OpenAI. And this story was crazy. This was 4 days ago, but SoftBank in talks for $5 billion loan backed by none other than ARM stock, which is now partnering with OpenAI. So it's like ARM is partnering with OpenAI. SoftBank owns 90% of ARM. SoftBank wants to collateralize the company that they own 90% of that's partnering with the company they want to invest in to get more margin to be able to invest in that company. And then that company is going to use that money to buy more ARM CPUs. I mean, this shit is crazy, bro. This shit is absolutely crazy. But, 3 letters is hopefully going to save us all and not make this a bubble, which is R, O, and I. And hopefully we see a lot more of it. I know it sounds like a Ponzi. I understand that it sounds like a Ponzi. I get it. But, and usually when someone says, I know it sounds like this, but that usually means that it is something. But I do think, legitimately, that AI hopefully is so transformational and so important, and these LLMs matter so much that it won't be that bad. No, in all seriousness, look, obviously we've talked about this ad nauseum last week, but the creative financing that is going on is inevitable when you're having a tech build out as big as this. Will it be a bubble? That depends on if there's going to be an ROI on AI. And over the next 2 years, you either believe it's going to happen and you invest, or you don't and you stay on the sidelines. And someone's going to be right. We're ultimately going to have to see who ends up being right. But I do think that, ChatGPT's growth, XAI's growth, Gemini's growth, AI in the enterprise, there's enough evidence to give you the early innings that AI is very real. It's just the level of gigawatts that Sam Altman needs to be able to make this happen. I mean, there was a clip of him yesterday basically saying, if we had 30 gigawatts, it still would not be enough for us to execute on the tasks that we want to work on. And in my head, I'm just like, dude, how much demand do you guys have? You guys need 30 gigawatts to make, that's not enough. But apparently that's the case. And so if you believe that, then you believe there's likely an ROI coming and there's a lot of verticals that they're going to be able to attack.
The world would like to do than they get to do right now. If we had 30 gigawatts today with today's quality of models, I think you would still saturate that relatively quickly in terms of what people would do, especially with the lower cost we'll be able to do with this. But the thing we have learned again and again is, let's say we can push GPT-6 to feel like 30 IQ points past GPT-5, something big. And that it can work on problems not for a few hours, but for a few days, weeks, months, whatever. The amount, and while we do that, we bring the cost per token down. The amount of economic value and sort of surplus demand that happens each time we've been able to do that goes up a crazy amount. So you can see, to pick a, I think, well-known example at this point, when ChatGPT could write a little bit of code, people actually used it for that. It would very painfully paste in their code and wait, and they would say, do this for me, and paste it back in and whatever. And models, couldn't do much, but they could do a few things. Models got better, the UX got better, and now we have Codex. Codex is growing unbelievably fast and can now do a few hours of work.
He goes on to basically say, hey, there's all these different verticals, Codex, Sora, the general, ChatGPT, et cetera, that are going to require so many gigawatts of compute. And we're going to have even more verticals. And as a result, we don't have enough infrastructure, which is why they're inking all these deals with AMD and NVIDIA and Broadcom. Now, on the other hand, you have the former Intel CEO who says all of this shit is a bubble.
Are we in some kind of AI boom, but also some would think about it in the context of it a bubble? There's a lot of leverage in the system. There's a lot of cash, but then there's a whole bunch of other folks who are trying to build these data centers. And whether there's the energy component side of it, or whether you think about the real estate component, I mean, there's just a whole lot of things happening at one time.
Yeah, and are we in an AI bubble? Of course, right? We were in that bubble. Of course we are. I mean, we're hyped, we're accelerating, we're putting enormous leverage into the system. That said, I don't see it ending for several years. I do think we have an industry shift to AI, as Jensen has talked about, and I agree with this, that businesses are yet to really start materially benefiting from it. We're displacing all of the internet and the service provider industries as we think.
Obviously, the Intel CEO kind of missed, and he acknowledged in that interview that Intel for the past 15 years missed AI. So, yes, he's a bit salty, and he probably doesn't. As much as he owns some Intel stock, I don't know if he would love to see Intel go to the moon. Not under his leadership, right? Just as a human being, that probably would suck for him to see. But at the end of the day, you do have a bunch of people trying to make the argument that if the ROI is not there, it's going to be one of the biggest bubbles ever. And then you have Sam Altman that says, none of you guys understand how much compute we really need. And quite frankly, as much as Elon hates Sam Altman, I think Elon and Sam Altman agree. I think Elon has quite literally said what Sam Altman has said in different words. What Elon says, we need 1 trillion gigawatts of power. I mean, Elon has said we need more and more power because from a training FSD perspective and from a trading optimist perspective, Elon understands how much compute is going to be needed. And so I think pretty much all the world leaders of these companies, Zuck, Sundar, Elon, they all agree that we need more infrastructure. What I think the market doesn't fully know about, and the market's giving them the benefit of the doubt, including all of us that are investing in their stocks, is there will be a return on investing in all these massive. If you're investing in Iran and Nebius, you believe that there is some return, and that's why they're getting demand from the hyperscalers. Like at its core, no matter what your thesis is around all these data center plays, all the big tech companies, you have to believe in 5 years there is going to be a measurable increase in the return on investment via AI. You either believe or you don't. But if you do, then it might work out very well. And if you don't, you're gonna have to see how this plays out. Now, last thing before we get into the market open, one person yesterday that really did surprise me, Howard Marks, he says he doesn't see a bubble. He says, I struggle to call the market a bubble right now. He says the S&P is expensive, but the quality of companies are much better. And he even said, I don't see mania in the market right now. Howard Marks is as value investors can get. And so for him to say, hey, look, I do think there's quality companies in the market that are transforming the way we think of valuations. And for him to not say that valuations are full-on mania bubble. He says they're expensive, which is fair. I mean, the S&P is expensive, trading at 26 times. But for him to say the quality of companies matter, and he's kind of validating the multiple expansion that we've seen, one could say that's bearish because a value investor is getting kind of bullish, or one could say that Howard Marks is a really smart guy, and even he's recognizing the value of AI in this entire technological revolution on the broader market. Ultimately, we're going to need to see that ROI, and over the coming years, we're going to see if that ends up playing out. Fear and greed is at 30. That's correct. Fear and greed is at 30, and so you do still have fear and greed pointing to buying into the fear that we have right now. All right, 30 seconds until the market opens. Thank you, everybody, for being here. Today is going to be an important day. We have China headlines 2.0 around rare earth metals, creating some pain in the markets. S&P 500 right here down about 1% as we get into the pre. The banks crushed it, and we'll talk more about the banks, but hopefully the bank earnings are enough to kind of get the market a bit more excited, and we'll see. Markets were closed yesterday across the world for the Columbus Day. We're going to see how that new money comes in and ultimately how the markets think of these bank earnings that we got today. Tuesday, October 14th. Thank you, everybody, for being here. 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. S&P goes down 657.21 on the day. That's down about 0.9% on the S&P. Amcor, that's down 3%. Rigetti, that's down 0.5%. SMCI, that's down 0.5%. Oklo, down 1.3%. Iren, down 1.4%. ARM, struggling to hold red. Walmart got an OpenAI partnership. That's why Walmart is kind of green. Palantir, that's down 0.5%. SoFi down 2.4%. Wells Fargo's up 4.6%. So out of all the banks, JP Morgan, Citibank, Goldman Sachs, and BlackRock, all of them beat on the top and the bottom line. But Wells Fargo's the only one that's really getting the bid right here, up 4.5%. So it looks like there's something deeper in Wells Fargo's earnings that got the market excited. Broadcom down 2% after the OpenAI deal yesterday. Ethereum under 4,000. Grab getting hit, down 3% right here. Very similar to Friday prices across the board. Nebius right here, 131. MP Materials goes green. USAR goes green. And Energy Fuels goes green. Nuclear stocks and rare earth stocks are actually holding up. Everything else is getting wrecked. Meta, $4 away from going below 700. Baba from 190 to 160. That's down 3%. Robinhood lost 150 last week, lost 140 yesterday, 136. That's down 3% on the day. Nvidia, wow, back to 183. This is exactly where it was on Friday. After hours, it was at 180. So it's just where it was before the second Trump tweet came after hours, 183.05 on Nvidia. The meme stock ETF, that's down 1.2%. Rocket Lab back down to 65. Applied Digital, that's actually holding up pretty nicely from last week after they had a really good earnings, but that's at 34. That's slightly down on the day. Oracle down 1.5. Venture Global, 870. Down 3.8% on the day. My goodness. Google 241. BMNR is probably at 52. BMNR 52.95. That's down 7% on the day. ARM is down. Walmart's one of the only green stocks because of that OpenAI partnership that's holding up. AMD had a partnership with Oracle today. That's getting AMD some love. That's up 2%. Verizon's probably green as a value stock. Verizon getting some love right here. Salesforce also had some announcements this morning, I believe, about more investments. Also, I think Salesforce collaborated with OpenAI, even though they were already collaborating with OpenAI, but they announced something with OpenAI. We'll get that headline in a second. But Salesforce right here is down 1%. Navitas was up 40% after hours yesterday. Navitas up 15%. You can't be too upset, right? It's not at 14, but it's at least up 15% at 1140 right here. Did break 14 after hours. Palantir right here down 1.4, even after the $200 upgrade from Piper Sandler. Micron's down 2. Cypher's down 2. Lockheed Martin's down 1. UEC Uranium, that's down 3.3. How about Quantum? IONQ is down 5%. D-Wave is down 2%. Rigetti is down 2%. D-Lo got an upgrade to $19 today. That's actually green. Some international exposure. Wow, look at that, breaking 15. D-Lo, yeah, upgrade this morning to 19. Not too bad. That's up 6% on the day. So D-Lo holding on. VIX is at 21. So VIX is obviously green, which is why the markets are red. VIX is up about, 20%? Roundabout 20% right here. We'll see if that gets to be a 30% spike. S&P officially down more than 1%. There you go. Officially down more than 1%. There is that red candle, 1.03 on the S&P. Amazon probably red along with it. There you go, 214, down 2.5%. The Googs, if that breaks 240, it'll be similar, 241. That's holding on. Where's Tesla? Tesla got to 435 yesterday. Tesla 422. There's a nasty red candle right there, down 3% on Tesla. Salesforce, an OpenAI partner across enterprise work and commerce, and Anthropic and Salesforce brought in strategic partnership. Okay, so Salesforce partnered with both of the leading LLMs, but that's not helping their stock in the midst of this, down 1.27%. A-Lab's down 12.5. Why is Arista down 12.5? That's a bit aggressive. We know, but this is not Arista. This is no, Astera. Arista was down yesterday because some of the networking from Meta was switching over to NVIDIA. So that was a loss of some business for Arista, and that's why that got hit. Astera, I don't see a headline on Astera, but it's getting hit. Yeah, I don't see a headline. I don't see a downgrade or anything, but it's down 12% on the day. Iran, is that rebounding a little bit? Iran, well, not really. 61, down 4.5%. Has not really bottomed yet. I don't think anything you could say has definitively created any level of a bottom yet. We don't see any V-shapes at all. S&P continues to fall, 655.80. 655.80. CoreWeave's down 7%. That seems a bit aggressive. Not sure why, but I guess it's because all the data centers are getting hit. Nebius is down. Well, yeah, I mean, this is just the bucket of data centers. Nebius, CoreWeave. What about Bitfarms? Bitfarms hit 6 yesterday. Bitfarms, wow, 495. So, I mean, look, that's still up from $2 if you bought it 2 weeks ago, or 250. But it's losing not only the 6s, but also losing the 5s. CleanSpark's probably down along with Marathon. CleanSpark's down 4%. Marathon, that's down 5% as well. NVIDIA, are we below 180? We are pretty damn close. We got $1 away from going below 180. Galaxy down 9%. Yeah, so all of these data center plays are getting hit right now from a perspective of, I guess, China rare earth metals causing such pain. I don't necessarily know. Look, the rare earth metals definitely affects all the data centers because you need a lot of rare earth minerals and metals to build out the data centers, copper being one of the biggest ones. But I don't think the escalations have gotten to such a point where we have completely isolated China and we're in a shortage of rare earth metals. Now, maybe that's how the market's perceiving it. And, you know, I guess the market is free to perceive it however they want because we've been running hot for the past couple of months and they're afraid of any little thing that can mess it up. But it doesn't necessarily seem like that's definitely the story that's happening right here. Tesla down 3.2%. That is also getting hit. Is SoFi down because of China? SoFi is down 5% because of China. Why not? Clay, thank you for the super chat. Doesn't Microsoft own 49% of OpenAI? Why aren't people talking about buying Microsoft if OpenAI is taken over? So OpenAI and Microsoft have a very weird agreement. From what I've read, Microsoft right here at 506, by the way, if you buy Microsoft, yes, you have exposure to OpenAI, but it's not 50%. It's more like 33%. Again, you kind of got to go through the weeds of their actual agreement to understand it. By the end of the year, theoretically, they should be negotiating an agreement that gives Microsoft an equity stake, doesn't allow Microsoft to participate in future rounds and take their IP and all this stuff. And, Nadella's not had the best relationship with Sam Altman. That's well documented over the past couple of months. So yes, you are getting OpenAI exposure. I just don't know if you're getting 50% exposure. But I think by the end of the year, we'll have much more clarity on what that looks like. NVIDIA right there, 40 cents away from losing 180. Meta, are we below 700? Powell is speaking at 1220, but I don't know if Powell's going to say anything about the markets. Like, remember a couple days ago, Powell had that 5-minute pre-recorded talk and he said nothing. So I think today he might take Q&A and actually talk about the economy. But even if he does, what is he going to say? We're cutting rates? We already know that. I mean, I don't think there's anything Powell could say that. This market is not on hinge because of Powell. They're not afraid that Powell's going to say something scary. They're afraid that this China rare earth metal thing is becoming a bigger deal, or at least that's what they're making it seem like is becoming a bigger deal. Wow, S&P 1.28%, 654. So I don't think Powell solves this. Powell's not going to say anything about China that calms the market down, and the market's already pricing in rate cuts. 2 months ago, we were listening to every syllable of Powell because we didn't know if he would actually cut rates. Now he's basically said he's going to cut rates. This is more of a, when is Trump going to comment on what the hell is going on with China again? And I think then the market's going to get some clarity. Oklow's down 5%. AMD struggling to hold on to that last dollar of green. Goldman's down 4% after an amazing earnings. That's stupid. But the entire market's going down, so it's going down with it. Citigroup's down 1%. JP Morgan down 3% after a phenomenal earnings. Pinterest down a little bit, and then Broadcom down 4% as well. Nokia is green. Nokia is the best stock in the world, bro. Of course. There you go. Nokia is green. What are you buying? Is anyone buying anything? Are you taking a nibble already? It's 9:39. Maybe it's a little too early to get excited to buy the dip here, but I mean, you definitely have a little bit of a dip across the board. HIMS right there down 4.5%. NVIDIA down 3.8%. Galaxy down 7%. SoFi down 3%. I don't see any V-shapes yet. We got to wait for some green candles for it to really signal any level of a bottom if there is. VIX is printing. I see a bunch of NVIDIAs, grabs, BMNRs. I mean, look, low BMNR, low 50s BMNR. I don't think it's horrible. Amazon, Galaxy, ARM went green. Okay, ARM holding on to a little bit of it. AMD. All right, so typical names. The rare earth ones are still holding on. MP. Wow, no, rare earths just went red. Wow. Oh, this is a sell-off. Rare earths just went red. MP down 3.5. How about USAR? Yep. Wow, look at that. 6% candle, folks. You get a little bit of green right here. It bounced off 33. That means it was even worse than 6%. It was probably 8%. What about energy fuels? That one also went red. And then the nuclear ones, nano nuclear went red, and then SMR went red. All right, so you do have red even in the safety plays. The only thing that's green is Nokia, ARM, Wells Fargo, BlackRock just going green. That's a pivot. There you go. BlackRock going up 4%. And I think that's pretty much it. I mean, everything else seems to be red. Opendoor 5 cents away from losing $7. Actually, it did. $6.97. It hit $6.97. Soundhound, that goes green. Soundhound about to go green. Looks like it bottomed at 1850. Amit, are you buying Next? I have not bought Next yet. I don't even know why it's been down. Wow, 582. Yeah, I have no idea why it's down. Again, I don't know the most about this company. I do understand from Matt's perspective, it is a buy and hold for a long time. And so, if you buy the dip on this, you kind of just stack the shares and let it print over time. Again, they don't have revenues yet. They don't have earnings yet. $1.5 billion company. They're building out their pipeline. So you kind of think of them as an oil and gas startup that's public. And you kind of just acquire and hold it for the next decade. At least that's how Matt has described it to me. Nano Nuclear, that's down 1.6. Soundhound, that's now down half. Where's Hoodie? Are we below 130? Are we below 130? 134. My last buy was 125. Let's see if we get there. Let's see. Ronald says, is this guy live every day? Yes, we are live every day. Market open, market close, analyzing the global capital equity markets. And unfortunately, on a day like this, you are seeing some pain, or fortunately, for those that want to buy the dip. Again, We had a lot of green days. Like the stream over the past 2 months, August and September, has been green almost every. I think we've had like 3 or 4 out of 60 days that were actually red days that we closed. So, we're getting some October volatility. It is what it is. We haven't got it for 2 months. It's annoying to deal with, but nonetheless, it's something that we have to deal with. You have Nebius right there. That's down 5.6% on the day. He skipped a whole day last week because of the dentist. Dude, my dentist better not text me and ask how the root canal is doing today. Because I'm probably down even more money. How much am I down? Let's go to the portfolio. How bad is it? Let's see how bad this shit is today. Let's see how bad. 130. 130. That's actually not that bad. I thought it would be worse. Dude, at 4 a.m., I glanced at my phone. Does anyone wake up in the middle of the night and just like check their portfolio? It's not healthy. But I did that shit and it was worse. I think that's why I had some bad dreams because I went back to sleep. I had horrible dreams last night. Like horrible dreams. I don't know what happened. I mean, I was even a little bit late when I woke up today. I was like, dude, what were those dreams, bro? Probably because I saw my point. Dude, all of you guys. Everyone's saying yes. We are some freaking gens. Dude, honestly, I kind of thought it was just me. I thought it was just me that randomly wakes up at 5 a.m. and the first thing I check is my portfolio. Like, dude, we are some D-gens. Freaking 5 a.m. checking our portfolio to see how much we're red or green. It doesn't even matter. It's the pre-markets. Like, there's not even that much volume. This is ridiculous, bro. We are actually crazy. NVIDIA 5 cents away from losing 180. But I did it last night, and then when I went back to sleep, the dreams were just not good, bro. Like, they were just not good dreams. Microsoft right here down 1.4. Meta is about to lose 700. SMR is down 6. Manveer says, I'm looking for dips 24/7. Yeah, I mean, if I ask the question, how many of you bought something at 5 a.m. when you woke up and you see your, something's red? I've definitely done that before. I've also sold stuff in the middle of the night. Because some stuff you buy and you didn't know if you were going to hold on to it, and then it's randomly green overnight. And you're like, screw this, I'm getting the hell out of it. And you just like, I feel like all of us have done that at least once or twice. Tesla loses 420, down 4%. Tesla's down, Rigetti's down 4, D-Wave's down 4, Amcor's down 3, Palantir's down 3, SMCI down 1, Oklo down 3, AMD still holding green, and Domino's still holding green in the midst of all of this. BlackRock also a little green, Bitcoin 110, unfortunately. That one still getting hit. Yeah, a decent amount of you say you do that. Yeah, pretty much all of us. Again, the whale that went short crypto, we talked about it yesterday, but he went short crypto at 116. This is the same guy who went short crypto right before Trump tweeted the China stuff. So that same person is now continuing to be short. By the way, $200 million was liquidated from the crypto markets at around 8 a.m. So at 8 a.m. this morning, you had leveraged longs get liquidated to the tune of 200 million. That's not as bad as the 19 billion that existed back on Friday. But still, you have some liquidations as Bitcoin loses 116, going all the way down to 110. Big Bear is up 22%? Really? Okay, it's not up 22. Well, it's up 22% for the week. It's up 1.3% on the day. Big Bear holding on is pretty encouraging. I mean, this is not a name that has produced really good earnings results. So the fact that it's holding on is pretty incredible. That's up 1% on the day while everything else goes green. Where's Amazon? Are we below 210? 213. 213 on Amazon. BMNR, are we at 50 yet? BMNR, I think it's probably holding 51, 52.60. That's not too bad. Ethereum at least kind of leveling out at 3,900. That's allowing that one to hold up. Bloom Energy had a big deal with Brookfield yesterday. Bloom is down 5%, but it was up 30% yesterday. $5 billion deal. So that one probably deserved the move yesterday. Grab still getting hit. Grab 578. It got to 570 at the lows. Now at 578. Are we recovering? Let's see. Let's organize these charts and see if we have any level of a V shape here. So, okay, hood bottom was 133.34. We are above that bottom. Amazon bottom was 213, 212. We are above that bottom. BMNR bottom was 52.02. We are above that bottom. Grab was 570. We're above that. Meta was 699.33. You see that green candle right there? We're above that. What time was that? That time was 944. So about 3 minutes ago, potentially is the bottom. Maybe Microsoft 506. We're now at 507. And obviously I say bottom with a lot of caution because, this could all just violate those intraday bottoms very quickly. But you are seeing across the board, SoFi 25.75 to 26.30, NVIDIA 179.70 to 180.8. Again, it's really early to say that is the move for the day. But you do have across the board, CoreWeave 130 to 132, Iran 59 to 62. I mean, dude, when the algos decide to go up, the algos go up. Google 240 to 241. And then Nebius 125 to 127. Still got some red candles, but at least you're seeing a little bit of a hint of some of that green. Swift, thank you for the gifted 5 memberships. 5 of you guys just got gifted from Swift. Thank you, sir, for the gifted 5. And thank you for being here. We got Larry Fink on CNBC. I'm assuming he's going to be talking his book around tokenization and data centers. Let's see what he has to say, and then we'll get back to this.
In the market throughout the cycle. Even if you put money in the United States in the year 1900, and then you had the Great Recession, you had the Depression, you had all these things, you would have earned over 9% over 125 years. So I'm not here to tell anybody if the markets are going to go up or down, but over a long horizon, and every individual who's thinking about it should be focusing on these opportunities. And I'm absolutely thrilled to see more and more young people investing in equities, not just Polycom. They're investing in equities. And if they can now translate that from just a trading and flipping account into a long-term investment strategy and be an owner of those over long horizons, over your lifetime, you're going to do really well. And another interesting point, I think I've said this before, but over a 30-year cycle, if you earned an extra 0.5%, over 30 years, 0.5%, your retirement pool of money is up 15% more. Just 0.5%. You got capital structure, passive, active, and now crypto.
Yeah. Are you worried at all, though? I mean, I think privates and all 660 billion in AUM for you guys.
Yes.
It's not an insignificant business anymore. You built it pretty quickly.
We're in the top 5 in that business now.
But there are starting to creep in at least some concerns. The First Brands bankruptcy.
Sure.
It's maybe a one-off for Tricolor, which Jamie Dimon's talking about. But in general, Larry, the idea that so much money has come into this and that the underwriting standards perhaps are not what people hope for. Any concern there?
I'm always paranoid and concerned, but actually credit trends recently are actually improving. So let's think about the private credit market, because that's what you're referring to, David. Outside the banking system, private credit is about $2 trillion, of which about $200 billion of that $2 trillion is asset-based finance. And then you have receivable-based, both Tricolor and First Brands.
All right, we'll go back to Larry Fink, but again, he is very aggressive based on other interviews I've seen of him over the past couple of months on pitching the private markets to your 401ks. Trump, there was a big headline 2 months ago that we covered on the channel that Trump is now going to allow 401ks, which are retirement accounts, to have private equity in them. I really don't think that's a good idea. I think the reason Larry Fink is pumping private equity is because if you know anything about private equity over the past couple of years, it is in a bubble. I mean, we talk about bubbles. There are no real buyers for private equity. And I think they really want to dump it on retail. And the easiest place to dump it at is institutionalized 401ks, where people can have this elite private access to an opportunity that only rich people get. And then, that entity ends up underperforming. So, I mean, obviously they're going to try to get 401ks access to private equity, and Larry Fink's going to be at the head of that. I don't know if that's going to be the best opportunity for retail. Folks, we are trying to recover a little bit. I mean, we're up from the lows where we were at about 5 minutes ago, but it's not getting a lot of steam. Grab right there at 580, hoodie at 133. It got up to 134. It's not really moving above that 133 level. MP just went green, so you have a lot of the rare earth mineral stocks about to go green. That's a real V-shape. Look at that. From 98 to 88 back to 94. It's not a full V-shape, but it actually looks like a V. So you're seeing those get some real recovery. You have a lot of people coming in to buy the dip on that. Navitas up 18%. Walmart and that OpenAI partnership keeping them afloat. S&P still down 1.3. It got to 653. It's at 654. I don't know if 653 really is that bottom, but it is still pretty much down on the day. Doug says PE investments have done okay, but with the lack of exits are the problem. Yeah. And I think a lot of the private equity market is looking for an easy way to exit. And it's not easy to exit because you have to call up your other private equity friends and they know what a good deal looks like. So they're not going to give you a good deal. Right? So you're like, who the hell is going to take this off my plate? And, if you can incentivize retail investors to have access to some private, unique opportunity, it definitely becomes compelling to a lot of people. But the question is, will those perform for the long time inside of a 401k? And I think that's what, BlackRock is really focused on now as one of the next legs of their private business. S&P got a big green candle right there. Look at that, 655. It was just in the low 654s. That was a nice move up. I don't think we have any data today. I don't think we're getting any macro data. This is all just algos going back and forth right now. Do we get anything today? No, we get nothing. We just get Powell talking, and he might not say anything that matters. But you did get a little bit of a pump. Basically, they want to dump it on retail. Yeah. But look, here's the thing. I think retail should have access to the opportunity. Like, if you want to have private equity in your 401k retirement account, you should have access to it. I don't disagree with completely barring it to retail. It's just a question of, are there going to be good opportunities that are meaningful enough to hold for 30 years in a retirement account? And that's what we're going to have to see long-term. Verizon, that goes green. Navitas up 20%. S&P actually making a move. It's almost going up a full $1 in the past 30 seconds. CleanSpark's up 2%. That one's recovering. Look at that. Back up to 20. Palantir was at 175. Palantir was at 170. It's down from 175. Got to 173, so that's still slightly green. UNH was at 353. It's at 356. That's green. You got another quantum stock, LAES, if I'm not wrong. These guys are quantum. That's up 15% on the day. So the quantum names continue to hold on. Open Door goes green after falling below 7. Open Door right there, 729. All right, so I don't think you can say it definitively, but it definitely feels like 9:44, 10 minutes ago, Eastern, might have been an intraday low. Even Big Bear, look at that. 933 on Big Bear. Good. 40 million shares of volume in 20 minutes on Big Bear. Rock Lab and ASTS, space is going green. Rock Lab, that's green. ASTS, that is green. 9160 on ASTS. Rock Lab trying to get back up to 70. CRML, Critical Metals, that's up another 26%. Dude, these guys were $11 last week. It's up 1,000% in 6 months. My goodness. And you can't even say it's that meme-ish. I mean, I don't know that much about the company, but at its core, if there's not that many companies in the rare earth space, the only ones that are there are going to catch the bid. And that's your MP, that's your USAR, and that's your CRML and your TMQs. It's like 4 to 5 of them that are catching the bid. TMQ right there is up another 20% as well on the day, along with SoundHound doing its thing. All right, so far, if you bought the dip 10 minutes ago, you're probably being rewarded. However, if we remember on Friday, that first initial dip was rewarded for like 20 minutes, and then we went lower. And then that dip was rewarded for 20 minutes, and then we went really low. And then we had the after-hour sell-off. So I definitely think it's too early to tell if dip buyers 10 minutes ago are definitely going to be happy with the dip that they bought. At least today. Long term, you probably will be happy. Yes, but that was because of tweets. Well, who knows, dude? What if Trump tweets about China? Again, China, from my understanding, escalated it a little bit more this morning. Not to an extent where I think Trump needs to retaliate, and I think Trump would probably try to de-escalate based on what China said this morning, because China is somewhat trying to be reasonable. But if Trump escalates again, and we've seen him do this before, then obviously that could be a catalyst. But we're going to have to watch out for what he says. BMNR is 53, so that one went down to 52. That one holding up. Oscar also holding green, which is very nice. Oscar right there, 20.55. Oscar got to 25 last week. So Oscar is still holding into the 20s. Zoe says market needs to stop playing around and fully dip. Okay, what would a full dip look like to everybody? What would a full dip look like? Like give me a level either on a stock or on the S&P. I think S&P 630, that's like a real, okay, we flushed out 2 months worth of gains. That is your dip. I feel like that's what we got to see. Because 3% down is not a full-on dip. It's painful, but it's not like we flushed out. By the way, Bitcoin ETF trading volume in the first 10 minutes of today, $1 billion. So you got tons of people trading the iBits of the world, even though that's down about 4%. 6,100 on the S&P, 600 on S&P, 5% S&P down, 620. Okay, most people I'm seeing 6,150 to 6,200. 6,400 is support. Yeah, that's why I said 63, because if we lose support, then it would be a full-on, okay, we got flushed out. Look at the S&P, bro, 656. It was down 1.5. Now it's down 0.97. I mean, that's not too bad to see. You got money, obviously money's coming in and buying right there. NVIDIA 160s. Dude, now that we know so much more about NVIDIA over the past couple months with all these deals they've signed and the Middle Eastern revenue that is yet to be achieved, and obviously the China revenue that's coming. I mean, you give us 160 on NVIDIA, I think a lot of people would be excited about that. I don't know if NVIDIA ever has another DeepSeek moment that creates that opportunity. I mean, realistically, most of us got to buy NVIDIA because of DeepSeek. Like, we got really good prices because of DeepSeek. If it wasn't, and then DeepSeek kind of I mean, the lows were 86, but then it stayed from basically 100 to 110 for like 4 months. And that's when I think that's when at least I really developed a position. Without that, I don't know if a lot of people get to benefit from NVIDIA this year. But I'm also not sure if we would get an event like that again. Rock Lab right there, 65.91. Oscar still at 20. Bitmine loses 53. Back down to 52.61. We are at extreme fear and greed. Let me see. Okay, we are on the edge of going to extreme. We're at fear. Another 1% on the S&P would easily get us to extreme fear, and that would probably be your easy dip buy. But we are at fear right now. Full dip would be BMNR below 45. That would mean Ethereum probably below 3,500. We'd have to see if that plays out. Amit, are you ever going to buy XRP? I don't fully understand the value of XRP in a world of stablecoins. Like, if the whole value is cross-border payments, I feel like stablecoin kind of solves the problem. Grab right there, 587, all the way up from 570. So Grab making a bit of recovery right there. Even Steve, dude, Steve loves XRP, and I was talking to him. I was like, bro, like, how can you hold on to this knowing that stablecoins are like the use case? And he was like, yeah, you have a point. He really didn't argue with me. He's not selling it because he loves holding on to it. And I'm sure there's probably a deeper thesis that I don't know about. But I mean, if the majority of the world is heading on to stablecoins and a lot of that stablecoin supply is Ethereum and Solana, I'm not sure the massive bull case for XRP. Microsoft right there down 1%. SoFi still down 2.7. Galaxy was down 9%. Now it's down 3. Look at that. 37 up to almost 40, 39.80. And then Nebius still down about 5.89%. Look at Chamath's SPAC, AEXA. That's up 2.5%. Look, I do think Chamath's SPAC is going to do well. I mean, I think he's really motivated to bring a company public that is going to be better than the 2021 SPAC era. I have no idea what the company would look like. But I mean, even if you look at the S1, he doesn't get paid until the stock goes up 50%. So unlike in 2021, dude, in 2021, he was making a couple $100 million. Let me say that again. A couple $100 million per SPAC just to be the sponsor of the SPAC. So I do like that the incentives are a lot more aligned for this one. But then again, you know, whenever SPACs come into the market, there's probably excess liquidity. There's something that needs to be dumped in the public markets. And the question is it a value or is it going to end up being a dud? ASTS right there, 90. CRML still up 22%. Then Bitmine, 52.61. Serve Robotics, is that moving today? Serve, that's down about 6.83. That is also red. I bought more Amazon and Oracle. Oracle, is that below 300? Oracle, yeah, there you go. 294, back to where it was a couple days ago. I bought more Amazon yesterday, bro. I think you can sleep well at night buying Amazon. I really do. I mean, it's not that scary to buy it here. And if it goes down, it's freaking Amazon. Like, you just don't have to worry about buying the dip on this. Like, it's freaking Amazon. So if any acceleration in AWS happens, I don't think there's going to be too much of an issue. Take a look at this chart right here from Bloomberg on the ETFs and the amount of volume they've received or inflows over the past year. So the year-to-date flow is 981 billion, almost a trillion. Last year was 1.1 trillion, so they have a couple months to break that. They are on pace to get 30 billion a week over the past 7 weeks, and they had 180 billion in the past month. VOO is number one with 90 billion. IVV at 33 billion. SGov, which is basically cash, treasuries, 29 billion. And then IBIT is number 5 at 28 billion. And then you have gold at number 8 at 15.7 billion. So a gold ETF and a Bitcoin ETF, and then you have Ethereum at number 12 at 10 billion, are in the top 15 ETFs of the year for year-to-date inflows, which is quite incredible to see, given those asset classes, are much different than just the broader S&P 500. Oh, we do have some data. Small business optimism. There's a survey on that. Let me pull that up. Oscar going a little green. Let me pull that up and let's see the results of that.
Largest real estate owners about what he
that again in the market right now. But guys, I wanted to highlight the data point of the day. We're lacking economic data in this government shutdown here in DC because that's not happening here. But we did get NFIB, the National Federation of Small Businesses. Basically, they give their optimism, pessimism report, and it was a step back. It actually saw a decline for the month of September, the optimism index overall for small business. But you can see on the chart here, we're still not too far from the highs. The recent high was 104.5 back, in February 2020. 93 is kind of the average in 2024. But it is notable that there was a deterioration in September. The uncertainty index rose to the highest level since February in that index. I don't know, guys. When my kids have meltdowns, we ask them, is it a big deal or a little deal? This one feels like a little deal, but it is worth watching when it comes to.
All right, so not that bad. Small business optimism slightly decreasing. I mean, that's natural where you have a labor market that's not as strong. So you would imagine small businesses are feeling a little bit less optimistic, but rates coming down should help with some of that optimism. 181 on NVIDIA from 179. So that one's starting to get a more meaningful recovery, still down about 3.5% on the day. But it doesn't look like that data is enough to create some of the pain that would continue affecting markets. Rick, thanks for the super chat. Amit, what are your top 5 positions in your personal portfolio? Palantir, Hood, NVIDIA, BM&R, and Grab. Those are the top 5. Palantir, Hood, NVIDIA, BM&R, and Grab. So that's what I got. And look, year to date, that's done really well. And, I think Grab is the wild card in the next 3 months. If Grab can really ramp up, I think that could really help the year to date. But I'm happy with that for the year. And that's why, going back to that conversation about FOMO, I don't feel that much FOMO to get into, a bunch of these other names that are like a Bitfarms, like, look, it's $5. You can buy 1,000 shares. Boom. You see if it run up to 10. But what if it doesn't run up to 10? What it's already up 100% from 250 to 5? Do you know anything about Bitfarms and their data centers? These are the questions I think people have to ask. And what I'm seeing, at least on X, is not a lot of people care about asking these questions. They don't give a shit. They just want to jump into them, which is natural in a bull market that happens. But I think everyone has to have that risk reward framework in their mind of how FOMO do they want to be, how much risk do they want to take, and how much they want to just sleep better at night. I'd rather buy Amazon than Bitfarms. Bitfarms probably outperforms Amazon end of year, bro, just based on the momentum. But I sleep better knowing I have more Amazon than Bitfarms. And that helps in a variety of different ways. Yes, I have Tesla, but Tesla's not a top 5 position. NVIDIA is like a real top 5 Mag 7 for me. APLD, that's up 5%. Okay, so that one holding on, 3602, 5.2. So far, again, it does look like that 944 was the bottom today. Wow, S&P 657. Look at that. 653 to 657. If it recovers another $2, we are basically break even for the day, which would be really nice. But we have to see if we get there. Bitmine average is 46. 46 is Bitmine average. Google is pumping a little bit. Is Google pumping? 242. That's up from 240. Yeah, I did own Bitfarms before, ironically. Dude, one of my crypto friends told me to buy Bitfarms at like $1, and I bought it, and I think I made like 60% on it. This was like early 2024. And then I sold it, and I didn't think much of it. I didn't know every freaking Bitcoin mining company was going to transition into a data center play. And so, I mean, it's quite incredible. The pivot on these names are incredible. But then again, the question is, do you feel comfortable investing in these pivots? Do you know the facilities? Do you understand how many GPUs they have? Do you understand how much capacity they have to even generate revenue off their GPUs? Like, these are really important questions. And I will say the Iren army has been the most on point in terms of real hardcore due diligence. Iren and Galaxy, I would say. Iren's just outperformed really well in analyzing this stuff. But all these new ones that are popping up, Bitfarms, CleanSpark, Marathon, I mean, I think a lot of people are just FOMOing into them as a sympathy trade because they missed Iren and Galaxy. Again, which is fine. It's just like, do you want to take that risk towards the end of the year? And if you don't, then I think there are opportunities that are cheap that you don't have to necessarily chase. Global recession fears hit a 2-year low. Bank of America's October survey shows recession worries are at their lowest since Feb 2022, with groped optimism seeking its biggest pump since 2020. So I think I saw that headline as well. There was a couple charts that Bank of America put out yesterday, but based on their survey of fund managers, it looks like most of them do not really think a recession has to happen, which is bullish. But then again, you got a consensus opinion right here. Also, Bank of America put out this chart yesterday, which, for anyone who's thinking of how or when to DCA, here's your answer. If you buy at record highs, you tend to do better than if you don't buy at record highs. Buying stocks at record highs over the past 50 years has been literally the best thing to do. So yes, everyone wants a decent entry, but over a 5-year time span, you tend to be okay as the markets continue to go higher. If the markets execute, right? And so far we are seeing, at least from the banks, again, for those that missed the segment on bank earnings today, they crushed. They absolutely demolished. JP Morgan, BlackRock, Citi, Goldman, Wells Fargo, all across the board. Amazing earnings. And hopefully that continues into the end of Q3 earnings season. Do we have any earnings today after hours? I don't think we do. No, nothing today. Tomorrow we have ASML, Bank of America, Morgan Stanley, United Airlines, and then Progressive Insurance. And then Thursday we have TSM. And then next week we have Netflix, Tesla, all that stuff. But most of these companies are doing well. Grab right there, trying to get back to 590. And then Bitfarms down 3%. All right, let's see. And you're making me feel calm. I do think it was important to talk about that FOMO segment because I'm getting a lot of DMs and I'm seeing a lot of people on Twitter just asking, like, hey, when do I buy into Iren? When do I get into Bitfarms? These stocks keep going up. I need to put my money there. And it's just like, what if you switch the mentality of, I don't need to put my money there. I don't need to do anything. I do not need to I feel like FOMO is this force that like almost like it's magnetic. It's almost like you have to be. It's like you don't have to be in everything. You just don't. And if you're already doing good year to date, you really don't have to be in everything. You get to. I mean, that's called greed. If you're up way more than what the S&P is up this year, do you really have to FOMO into some random name that you know nothing about because you think it keeps going up? I mean, no, you don't have to. You can just say, I don't need to be in this, and I'm fine sleeping at night. Yes, I'm not going to get some 10x overnight, but I also am not going to lose my mind. Yeah, shiny object syndrome, exactly. Dude, and we've all been through FOMO. I mean, I think I've gotten way better at navigating FOMO, but a couple of years ago, I would have been buying up all these stocks like crazy, even if you're only throwing a couple $100 in them because you just want to feel like you're part of it. It's like, that's just not the right way to invest. It's just not. And sometimes you might get lucky and they might do well, but like, it's really a toxic strain on your mental to think you have to be like, if you miss Rocket Lab, do you have to get in at 66? No, you don't. There's a lot of opportunities in the market. If you really believe Rocket Lab's going higher for the next 5 years, then sure, you can get in. But like, you don't have to. There's other stocks that are out there that are probably cheaper than Rocket Lab. It just takes time to do the research and find them. But FOMO it's hard to ignore it because when your neighbor's making money on some random stock, you feel like you got to get in there. MP is still down 1.2% of the day, but that is a bit green, or that is about to go green. Iren about to go green as well. 1.3% down on the day. Scott says, ignore him, just buy it at 66. Erwin says, yes, you do need to get into Rocket Lab. Dude, look, as much of a hood bull as I am, objectively, people don't say I'm objective on hood. I'm like, bro, I'm literally saying the stock is expensive and I'm not buying here. I don't know how much more objective you can get. And I think Matt, if he was on the channel right now, he would say, yeah, Rocket Lab buying at 70, probably not the easiest entry point to justify. Now, again, if you don't care about the short-term movement and you're just like, dude, I believe in hood, I believe in Rocket Lab, next 5 years, I'm all in, or at least I want to have a position, and you have zero exposure, then yeah, I think DCAing is not a bad idea. But if you're buying it for the hell of buying it for the next 2 months, it's just a little bit more risk that might not need to be taken. That's all. I'm looking for 120 on hood. If we get 120 on hood again, I'd get a little bit more excited, which I don't think we need to get there, bro. That would be basically eliminating all of the S&P pumps. So I don't think we need to get there. But at least for me, I would be a little excited if we get there. Muckabee, thanks for the super chat. Everyone, including me, wants to be a millionaire overnight, but investing is a patient type of investment. Invest in the stock you believe in, do your due diligence. I did on Iran. Best of luck. Yeah, Muckabee made a killing on Iran, but he didn't get in at $63. He did a lot of research on this thing to get in early. And I think that's the other thing that people that have massive amounts of FOMO don't understand. It's like, dude, yes, some people got into Iran at $28 and just got lucky and they got a double, including myself. I bought 100 shares at $28.90 and it, now it's at 63 and that's great. It's awesome, right? But that was pure luck. That was just me like, all right, screw it. Let me just buy some. The people that actually made big money on this thing have been part of the story for a long time and they did a lot of freaking research to get here. If you didn't do that research to get here, you don't deserve the gains. Like that's the beauty of capitalism. Like if you didn't research hood or Palantir at $6-7, you don't deserve those gains. If you didn't research Tesla in 2013 on the Reddit threads when everyone thought it was a dead company, you don't deserve the gains. And that's okay. But that doesn't mean you have to FOMO into something that you think you deserve when you didn't really do the research to deserve. And it keeps you humble on knowing, hey, if I'm going to really do well on something and deserve a 10 bagger, it shouldn't be off luck. It should be because I researched it. I care about it. I spent the time and energy to do it. And that's what usually results in the best long-term approach to getting these gains. S&P 658. Look at that. 653 to 658. You're getting some recovery right here. You are getting some recovery. A couple more bucks and that breaks even. A couple more bucks and that breaks even. All right, let's go back to Larry Fink. Let's see if he can tell us anything else that's more bullish about data centers and crypto. Let's see what he's got.
Is really receivable financing. Right. So that's a very small component. Most private credit is no different than the type of lending that you do at a bank, or they may be companies that want to remain private longer, but the underwriting would be no different than a public underwriting. And so we're not seeing any really remarkable changes in credit trends across the board. But you're always going to have an idiosyncratic risk all the time. And by the way, that is capitalism. The capitalism is not meaning 100% successes. No. There are going to be failures. And when there's failures with bad leadership who, are with questions, 20 or 40 or 50% of a portfolio of that. But getting back to this, if you could add an extra 50 basis points in a portfolio over 30 years.
What do you need daily liquidity
for? So if you could invest 5% in these products, could that be additive over a long portfolio composition? And so that's how I look at it. But one other thing, we did another acquisition in Preqin, which is the largest private market data company. We believe for the Department of Labor to allow the insertion of private markets in 401ks, it's going to be hard for them to really move the fiduciary standard rule. And the fiduciary standard rule is a very strict rule. You better.
Okay, so Fink basically talking about the private equities of fiduciary rules that ultimately govern how those will get implemented into 401k. We do have the European President Lagarde. Let's see what she has to say. Maybe we'll get some thoughts on tariffs and what's potentially going on with China as well.
Inflation, employment, I think that the economies have been very resilient and much more so than we had anticipated.
How are tariffs affecting Europe's economy?
Well, there is the direct impact and the indirect impact. In terms of direct impact, Europe has 17% of its trade with the United States. So it is the largest partner, but it's not a massive amount of trade that we do with the US. So it does impact, and tariffs between the United States and Europe have gone from 1.5% to 13%. So that's a serious add-on which has to be borne by someone, either the exporter, the importer, or the consumer. And the indications we have is that it's, at the moment, borne a third, a third, a third. And we'll see how that goes, because clearly the exporters and the importers are squeezing their margins in order to absorb this additional tariff.
So what you've said lately at the latest policy meeting is that you think monetary policy is in a good place. You stopped cutting.
I think we are generally in a good place. So inflation is in a good place because we are at around 2%. We were at 2% on, really on the dot for 3 months. It went a little bit up in September. But I would say that the whole economy is in a good place. We upgraded our activity forecast. Unemployment is at rock bottom. Employment participation is up. And I would say that our monetary policy has done the job. We brought inflation back from the highest we had, 10.6%, back 2 years ago, down to 2%. So we have a 2% interest rate at the moment, and we are positioned to respond just in case, because while we are in that good place, things can happen. They can.
Okay, so I mean, she's signaling that Europe is doing decent. By the way, folks, it looks like a legit V. I mean, it's becoming a real legit V across the board. BM&R back to 53, S&P 658, hoodie back to 136, Amazon 215, Oracle from 291 to 296, Grab back to 592 from 570. You're seeing some real Vs across the board. I definitely said her name wrong, didn't I? Dude, it looks like a laggard. That's what it looks like, dude. It's French? Yeah, I had no chance if it was French. I had no freaking chance. Iran back up to what, 65, 64, 70. Look at that. All right, you're getting your V. I mean, S&P is still red on the day, but if it can go green, you are getting your V. And again, this goes into the conversation of FOMO right back again. Like now where there's a V shape, do you feel, okay, everything's good, I'm going to buy in? Again, it's a very simple proposition mentally that I think people have to ask themselves. Do I understand this company or not? Like, just if you think about it from first principles, if you feel bad that Iran went to 59 this morning and you didn't buy and now it's at 64 and now you want to get in because you think it's going to 70, that's fine. But do you understand why it should go to 70? Do you understand anything about the company? Do you even know the name of the CEO? Like these are things that I think are worth asking, unless you're trading. If you're trading them, it's a whole different question. If you're actually investing in them, I think these things somewhat matter before making a position. But over the past 48 hours, we've definitely had some opportunities to at least have a better entry into a variety of these names, whether it was Friday night, Friday after hours, or literally this morning. Yesterday, everything was kind of green. That has created some of these opportunities. PayPal is still down. Goodness, PayPal, dude. It got one little break last week, and it could not make a move above. Could not make a move above. Palantir is going for green. Palantir right here, 176.44. Okay, that's about to be 177. Big red candle on the VIX. Yeah, VIX was at 21. Did VIX peak at 21? Let's see. Yeah, the VIX is down. I think the VIX is decently down. Let me pull this up. It was up 20%. Now it's up 13%, which is nice. VIX still at 21, but it was at like 21.90. So you do have a little bit of a decrease right there. And so that's helping. Now it's only up 13% on the day, which is still aggressive, but not as bad. Grab right there, 593. Amazon at 216. Ethereum over 4,000. There you go. That really helps out. Trying to get back above 4,000. Amit, what do you think about HIMS? So again, my thoughts on HIMS, I've said for a while, I think it's cheap. I think they're growing really well. I think they have a sticky product. I probably don't think I'm going to keep HIMS towards the end of the year. it's just not a position I want to build out into a real position. Like those 700 shares have been stuck for the past year. Honestly, it's done nothing in the portfolio. I could have doubled down on my higher convictions. And look, like even talking about this FOMO thing, like I'll use me as an example. Hims was probably a product of FOMO on my part more than anything. Now, I did do a decent amount of research. I even went on a couple podcasts. I listened to a bunch of stuff. I have a couple friends who are like banging the table on Hims. And I got in at 55, but it was, I think, more so of just like, hey, this is probably a growth story that's going up and to the right. I want to be part of it versus do I really freaking believe in the Netflix of health thesis on Hims? Like gun to my head, do I really believe in it? It's like, no, probably not. And if the answer is no, then like, why is it even in the portfolio? Like, I think part of maturing is just being like, no, this doesn't deserve to be here. Like your capital is precious. If you don't really care about this, it shouldn't be there. And so that's probably going to be a break even that I take by the end, unless Hims rockets up to like 60 or something. But that money could be better allocated in higher conviction names. Even if Hims does well over the next 5 years, which I think it will. It's not being bearish on Hims. It's just like personally, do you care enough about holding? Just blame Nate. Yes, I can blame Nate. I mean, Nate freaking texted me every single day about it, which is why, I like Nate. Nate's a really good friend of mine. And so I should have listened to him on Nebius as well. But that's why I took it real as he was, a guy I like. He's a good friend of mine. I took it seriously. I looked into it. I was like, yeah, the stock is cheap. I really do. Dude, they're $11 billion company. This is not an expensive stock. It's just all the freaking lawsuits because guess what? Because of my FOMO, I didn't really look into all the compounder Novo lawsuit issues that they could face, which is something that should be central in your due diligence if you're going to get into a company that's rooted in these pharmaceutical aspects. And maybe I would have discovered, hey, I don't want to take the risk on that type of stuff. And I would have put my money somewhere else and that money would have done way better. But I didn't. And so I think these are the questions to ask yourself when you're trying to analyze if you want to buy a new stock. Palantir going green. There you go. 178. 178 going green. That is up. That is up. Again, they got that $200 price target upgrade. Like I bought Palantir at 171 2 weeks ago, which a lot of people would say, dude, what are you doing? Palantir is super expensive. Why? Because A, I have a massive position, and B, I want to add to 10% drops on names that I love. And I sleep better at night buying those 100 shares at 171 than YOLOing that $17,000 into some random name, even if that $17,000 would have done better than buying Palantir at 171. Because again, it's just a question of how much stress do you want to take on with money being allocated into stuff that you might just not fully know about. UNH right there, 359. That goes green. Clean Spark up 5% of the day. Big Bear still holding above $9. Next Decade getting hit. Bitcoin above 111. And then MP still down, but it's trying to go green. Is SoFi at 27? SoFi very close to 27. 2 cents away. 2 cents away for 27. And then Grab just went green as well. There you go. All right. So, I mean, look, it looks like a legit V. Wow. S&P 659. Okay, folks, we are close to a real V shape right here. Look at that. We are close to it. I mean, you got 0.5% away from going to break even, which would not be too bad. SMCI, is that going green? SMCI. Wow. SMCI goes green. BMNR goes green. Ethereum at 39.93, still just below 4,000. Then Hoodie back to 137. Marco says, what about taking some moonshot risk for fun? Yeah, I believe in that. I think part of managing FOMO in environments like this is you have to take some risk with money that you're willing to lose. So 100%, I agree with that. And I've done that. I've done that plenty. I mean, literally IREN, right? When I bought 100 shares of that at 28.90, I didn't know much about them, but it was kind of just like, all right, let me just buy 100 shares right here. SMCI, I think, is less moonshotty, but, like SMCI is not a position I heavily researched, but in general, I have a hunch that, hey, this one probably goes higher if GPU sales continue to go higher because liquid cooling technology is important. So like, I think it's very important. If you have a $100,000 portfolio, whatever the percentage you want to make it, but like, I don't know, $1,000, $2,000 of it having fun with, like, even if it goes to zero, it helps you navigate not putting 50,000 into something that can go into zero, right? Because all of us are humans and we have that human nature tendency to want to take a little bit of risk. And if you have like, $1 million portfolio, then maybe 50 to 75,000, you can take some bigger risks with. But the point is, I do agree with that philosophy. I ran above 65. It's just sizing it in a way that makes you feel comfortable with the portfolio. Rocket Lab, are we back at 70? We're not there, but we're very close. 68.58. SoFi back to 27. There you go. A lot of these stocks are recovering. Let me pull up the stock draft. Matt is absolutely crushing. 48% with Matt. I'm at 39. Nebius and AMD going down a bit over the past couple of days hurt me, along with Palantir. Steve's at 6. Chris is at 10. Tanner's at 18. Rocket Lab and ASTS really taking Matt ahead. I mean, the only loser Matt has is Dutch Bros. That's it. And if Dutch Bros has a recovery, Matt's going to be up like 60%. So that one working very well for Matt. S&P again, trying to get its move. Palantir 178, Hoodie 137, Google 243 on the day. Everyone's waiting for S&P to break that 667. Yes, we break 667. It's going to get a lot more exciting. But today, if we can just break 660, dude, we're 20 cents away from breaking 660. That would be nice to see. All the way down from 650 up to 660 would be a legit V-shape. I did not buy the grab dip today. I bought it yesterday and I bought it on Friday. I did not buy it today. But look, I'm ready for Q3 earnings, dude. They've gotten tons of price targets. JP Morgan has them at 7. Jefferies has them at 680. Maybank has them at 650. I think they just need to deliver a good Q3. They do. I think the stock's probably headed above 7 and it normalizes above 7. But we got to see. They got to give us a good Q3. Anthony Tan, he was already on the Wall Street Journal interview. He said Q3 results are growing exceptionally fast on the top and the bottom. I mean, I think at this point, obviously the stock's being a little manipulated by the shorts, but they give a good Q3, things could change. But even if they don't, I think I'm paying a fair price for Grab. That's why, I feel comfortable holding it. Is it moving up as much as some of these data center plays? No, of course not. And that's where you have to manage your emotions of all right, there's these other $5 stocks that are going to the moon and Grab's kind of stuck. But it's okay, but I can sleep at night with Grab. I've done all the work. I understand what I hold and I'm totally confident with holding it. And I think it literally just depends on how greedy you want to be versus how much risk you want to take. There's no right or wrong answer. It's just subjective to each individual person. ASTS 92, that's a new all-time high on ASTS. That's incredible. 92.50. CRML still up 22%. TMQ up 35%. My goodness, it hit 960 at one point. And the S&P still 20 cents away from 660. Amit, are you on Threads? I just saw your profile. I am not on Threads, but there's 50 fake Amits on Threads that just copy and paste my words on Twitter. So yeah, I'm not on Threads. Although I do want to make an Instagram. I want to make an Instagram. I want to make an Instagram that doesn't have to do anything with investing, just the behind the scenes on my actual life. But I also hate Instagram, bro. Instagram is I feel like Instagram's toxic. So the only platform I really use is X. But no, I'm not on Threads, but people just steal my content and they repost it on X every day. Your actual life is investing. So more dentist picks. Yes, exactly. No, but in general, bro, just for a life outside of investing, I think it's nice to just if you go out somewhere, post it on your story. But then again, even the concept of posting on an Instagram story, do people actually post on their story? Do you guys use that thing anymore? I used to do that in college. And then I think I woke up one day and I was like, dude, why am I posting on a story? Why do people even care about, what's the, it became so irrelevant to me. Nvidia back to 182. And I never thought of Instagram as building a brand. I thought of Instagram as just something for fun, but I stopped caring about having fun on Instagram years ago. And I kind of went all in on YouTube and content. But now as things have settled down a little bit, maybe we come back to Instagram. But I don't know. Yeah, I can put stories of my yacht on Instagram. That's the idea. You're such a boomer. Dude, I'm going to be 28 in 14 days. 2 weeks until 28 years old. That's crazy, bro. That's going to be crazy. Becoming an Unk. becoming an unk. All right, what other headlines do we have? What other headlines do we have? We have somewhat of a decent V shape. Google and the World Bank announced a partnership for emerging markets digital infrastructure. Okay, Google making more partnerships. We talked about the Bitcoin ETF volumes. NVIDIA back up to 182. Grab 594. S&P, there you go, 659. Again, very close to 660. Trying to really break that. If it does, that'd be very nice to see. And then Hoodie trying to break 137. Quarantine Quartet says our page has 1.2 million followers on Instagram and it's fueled so many opportunities for us. So Instagram as a marketing opportunity, I think is phenomenal. I've just never used it as a marketing opportunity. I'm so more so talking about Instagram for fun. Like you kind of don't care about building an audience or whatever. But you know, X and YouTube is where I've actually tried to care about building an audience. I don't know. I feel like Instagram is like, it's a different animal, bro. Like if you're a pretty girl, Instagram obviously is the place for like brand deals and stuff. Music, Instagram's amazing, right? If you're singing, dancing, that stuff's great. But I feel like X is for like hardcore news. Like if you're reporting on the news, that's where you want to be on X. By the way, though, speaking of Threads, Zuckerberg posted on Threads that they have more daily active users than X. They officially have more DAUs than X. He showed two charts. And so that's kind of crazy that Threads has more daily active users than X. It just goes to show the hustle of Facebook being able to build new social networks. Is it more influential than X? I don't know. But they've got tons and tons of people posting content every single. I think it's like 240 million people every day that use the platform. So it is quite incredible. Hey, Amit, I've been buying Grab in the past few months, and after my recent trip to Vietnam, I doubled down. The app works so good, and I feel like there's so much growth potential. Yeah, this is what I hear from a lot of people that visit the region. Also, again, they have 7.5 billion in cash. Like, I mean, once the narrative re-rates, you know, you have 7 billion in cash. There's a lot of things you can do with that. Just feels safer. You know, a company having that much liquidity that they can do anything they want with. To me feels a bit more safer, especially if there's growth prospects of upwards of 30%. Bitfarms, that one's still down on the day, but holding $5. Google 244, Applied Digital 36.39, Amazon 216. Let's see. Okay, so I was down 130, now I'm down 64. So we got a nice 70,000 recovery on my portfolio. Yeah, I mean, most of these names, there's Amazon still down from 220, Grab still down from 610, Rocket Lab still down from 70, but you are getting at least some green across the board. I promise X has more bots than Threads. One of the X heads of products came out the other day and they said they purged 1.7 million bots, which is good, but yeah, they probably have to purge a lot more bots to make this happen. Okay, let's get back to the European president and see if we can get any more thoughts on what's going on there. And then we'll keep going.
Can be shocks, they can be good developments, less good developments, and I think we are well positioned to respond to those potential shocks. Remember, we always target medium-term inflation, and the latest reading is good. The medium-term inflation is looking good as well.
So you've done the job on inflation. Does that mean you're done cutting for now?
I would never say that, because I think the job of a central banker is never done. So we tamed inflation so far. We are in a good place, as I said, but we have to anticipate anything happening. If we learned one lesson in the last year, is that we have uncertainty. Entrepreneurs, corporates deal with uncertainty, but we have to deal with uncertainty. And this is something that models cannot necessarily predict with perfection, far from it. So we need to anticipate political development, geopolitical changes, the shift in global order as we have seen it, to understand how it impacts our world and our monetary policy.
How high is the bar for cutting now? What would make you do that?
I cannot say.
I'm trying.
I know you're trying very well, but no, it's as I repeatedly said, we are deciding meeting by meeting, we are data dependent. But when I say data dependent, we're looking at everything. We're looking at what the models produce, we're looking at what the empirical data reveal. We are.
All right, so same argument as JPOW when it comes to data dependency. Look, if JPOW's cutting, you're likely to see central banks across the world start cutting. But I mean, they definitely have to make the case that the data will determine how much they cut. Now, you had Hock Tan, who is the CEO of Broadcom, who was talking to Kramer yesterday. And I mean, he was pretty bullish as well on this Broadcom OpenAI deal in terms of what they've been able to do. Here's what he said around where he thinks the generative AI market is ultimately going.
OpenAI, more quietly, I know for a fact people like Google, people like Meta and Microsoft has access to available power. The key now is to make these sites usable. Right. And a lot of it comes not just one big, we hear a lot of news about 1 gigawatt, 2 gigawatt. Sure, it's great to have that, but you don't need that for generative AI, especially in the case of inference. You want it distributed. So you can find lots of location on the power grid for 50 megawatts, 100 megahertz, 200 megawatts, and they're very available. Now, less and less so, no doubt, but with time, this becomes available and becomes usable power.
Right, I know.
So again, making the argument that the demand is there, which is the biggest thing I think a lot of people are struggling with. Like, is there real demand? The demand is there, as per Hock Tan's analysis, even though all of you guys thought I said Hawk Tua, which I don't know why it didn't even sound like Hawk Tua. But the question is, do they have the ability to actually execute on that demand by building out these data centers? And that's why the partnership with OpenAI is so important. By the way, S&P, I think we hit 660. Look at that, 660, 660. Any dips that were bought early this morning from 9:30 to 9:44 Eastern, you are probably being rewarded right there. There is not a full V shape, but a pretty damn close V shape. 660 on the S&P. Oscar 2140. I think it was $20 like 10 minutes ago. That's making a move. Iran 65. That's from 59. Hoodie from 133 to 137. Grab from 570 to 595. Bitmine from 52 to 53.20. And then SoFi from 25 to 27. So you are seeing a decent amount of the dip being rewarded for those that bought. Not too bad. Not too bad. Rocket Lab's at 69. Wow, Rocket Lab. Dude, it looks like, I mean, like, again, this thing busted through 70 on Friday. The only reason it closed below is because of the Trump-China thing, but it looks like it wants to get back. You know, and this makes sense. Again, like the China headlines that we talked about at the beginning of the show, I mean, could they escalate to be something really bad? Sure. But like, realistically, will they? I mean, they're not like threatening 145% tariffs like they were back in April. Like, it just seems like they're going back and forth, but not in some way that is so aggressive that it's turning into this massive, massive issue. It could, but it doesn't feel like that. And it seems like markets are basically pricing out a lot of that risk. And that's why you're getting some of that momentum. And then, yes, obviously retail is continuing to buy as well. ASML, TMC over the next few days, those are going to be important. Those are going to be very, very important. And we're going to see. Amit, would you buy Grab around 6? Yes, I have bought Grab at 6 and above 6. I mean, I think it's closer to 8 in fair value right now. So I have bought at those levels. I don't know why A-Lab's down today. Astera, that's weird, bro. Don't know why that one got hit. Still down 14%. There's got to be some downgrade or something that tanked them. I don't see the headline. Yeah, no one has a headline. Nothing that I see. Maybe it's technicals, but 13% doesn't feel like technicals. So that one is taking a hit right here. Matt, thanks for the super chat. What are your thoughts on real estate investing for diversity with the market so volatile? My fund that lends money on real estate is getting more inflows. I think people are worried. That's actually a good piece of data, Matt, that you're letting us know that you have a real estate fund that's getting more inflows. Potentially people want to diversify. I mean, look, I am not a real estate guy. I've never been into real estate. My dad, ironically, is, you know, he's had multiple investment properties throughout his life. So he understands real estate much better than me. But I like the stock market because it's liquid, and if you're willing to do the research, there are so many opportunities that you can find. Now, I think there's way more risk than real estate, but just like objectively speaking, it's way less work, right? With real estate. You just got to do a lot more work to manage a property. So I think people diversifying funds into real estate is normal. I mean, I think a lot of people have equities and real estate on the side. But personally, I tend to like the markets a lot better. And I think when you build up enough of a nest egg, then it's easier to get into the real estate game. But yeah, I mean, if you're getting more flows from retail investors into in a real estate fund, I mean, it likely means some people just want to diversify. Also, it could be people taking profits from NVIDIA and saying, yeah, I want to get into something safe. I don't want to take the risk with AI anymore. But a house that pays decent cash flow every month, well, that's not worth stressing over. So I think that makes sense. Oklo, are we at all-time highs on Oklo? Wow. We are at all-time highs on Oklo. That is wild, bro. I mean, at this point, I feel like it's legitimately algorithms that take over. S&P recovers after being down 1.5%, and one of the most speculative names in the market gets back to all-time highs. This is why we spent some time talking about FOMO today, because this is the stuff that will create massive FOMO, and you have to be able to figure out how to navigate it when you're seeing it. Oscar, is that moving as well? Oscar 2170, again, 25 is that all-time high, but Oscar making a big move. 2380 was the 52-week. 25 was after hours a couple days ago, and then Rocket Lab right back to 69. Ron says, I paid off my mortgage with Oklo. See, that's the cool part about a bull market, because if you believed in Oklo at 20, 30, 40 bucks when no one believed in it, I mean, you've obviously been rewarded, not to mention the people that were buying this thing under 10 bucks. Oklo are, for those that don't know what Oklo does, they're a nuclear company, small modular reactors. The idea is that their SMRs are going to be near data centers. And, they have a lot of ties with the Trump administration, the Department of Energy. They were literally sitting with Trump in the Oval Office when he signed a bunch of executive orders for nuclear energy. So Sam Altman used to be on the chair of the board of directors, but he stepped down. So you have that kind of OpenAI potential collaboration. I mean, dude, Oklo announces an OpenAI deal. This shit's going to the moon. It's like Oklo announces an OpenAI deal to build SMRs for their data centers. It is legitimately going to the moon. But do you want to take that risk? That is the question. I don't want to take that risk. I don't feel like I need to, so I'm not going to do it. But if you want to take that risk, then that's what I think. That's what you look up. I mean, at this point, I don't know what else pumps Oklo outside of an OpenAI partnership. Obviously, they can get partnerships across a variety of other industries, but like OpenAI would be the big one that takes this thing to $250. And a multi-year, multi-billion-dollar partnership would do that. And maybe that's why it's getting a premium. Maybe a lot of people think that's what's going to happen, but that would be the risk that you have to take. Oracle right there, 296. That's also green. And then Google is going green, 245. 245. Imagine Tom Lee in the White House. Dude, Tom Lee needs to go. We need to have a Tom Lee White House appearance. That would be so crazy to see. By the way, Robinhood is one of the top holdings now in Granny Shots, the ETF. I think it's like number 2. So Robinhood has become a massive position in Granny Shots. Granny Shots is outperforming a lot of the managed ETFs this year. Grab right there, 594. S&P just below that 660 level. Ron says, I do lose sleep every night owning NEO in pretty heavy. Where's NEO right now? NEO $7. I mean, dude, look, if you got in at 3 or 4 because it was there for a year, then hopefully you have a little bit of margin of safety. But the reason I'm talking about losing sleep so much is because I remember 2024, I had a lot of money in Robinhood options, and if Robinhood did not get to $25, I would lose pretty much everything. And so I just remember, like, every single day, it's like a ticking time bomb, and you're just waiting to freaking sell these contracts. But if I didn't do that, I would not have the ability to have the portfolio I have today. So it was a massive risk I took the entire year. But I remember how gut-wrenching it is every night. And then Robinhood tanked right on their Q3 earnings to like $19. And I was like, oh my goodness, it was above 25 for 3 months, and now it's below 25. And then if Trump didn't win, I don't know if it would have recovered, because the day Trump won, that's when like everything recovered. But it's tough. It's really tough sometimes when you are making that big of a bet. And again, if you don't need to make that big of a bet, that's where I just say, hey, maybe you don't need to dive into the FOMO as aggressively as some people may think. Yeah, the odds are usually that 95% of options expire worthless. So as excited as you are about your options going the way you want them to go, the odds are not on your side, you know? And so you got to really sometimes take the risk, but also navigate how it feels taking the risk. SoundHound, that's up 5%. SoundHound continuing its momentum after a great earnings. That one's doing pretty good. TMQ, my goodness, 60% on the day. Trilogy Metals, this is a rare earth play, going green. Going freaking green. Webull, is that still below 12? Webull, 1134. That's almost exactly where it was yesterday. Look, I don't know if Webull's bottoming here. I don't think they're sending this thing that much below 11. Maybe there is a little bit more downside to it, but if anyone wanted to take a swing at Webull, even if you just look at the chart, like the last time it was below 11 was right before they announced the $1 billion dilution, and that's already priced in. So I don't know. I kind of feel like Webull's not the worst bet here. It'd be more for a swing, less for an investment. Zeta, this one green on the day? Zeta 1875, that's down about 0.5%. AK Media needs to rebrand AK Quantum Metals. Dude, if I turned into a quantum company, I could raise $10 million tomorrow. Well, we use quantum computing to understand the fundamental dynamics of how stock prices move up and down. And based on our quantum epistemological understanding of the sociological diversity and dichotomy between the way the candlesticks move up and down, the quantum computers really create a unique and differentiated approach to understanding the quantum internet stack, which allows us to identify opportunities in the market. There you go, $10 million, bro. Right there. Right there. I mean, dude, that's basically what's happening, bro. That's basically what these quantum companies are saying. They're saying a whole lot of nothing, but they're using the right words. Now, granted, there is enough energy in the market to be excited about what they're saying, and maybe it grows into something. But I mean, dude, Rigetti trades at an 18,000 times price to sales. Like, obviously, investors don't care about the freaking market cap or the price to earnings. They care about the narrative. And if that narrative doesn't die down, then these quantum stocks don't have to die down, which is why I think the shorting of them is kind of like, look, if you're hedging with the short, okay, because your hedge is supposed to go to zero and the rest of the market does okay. But if you're genuinely short because you think they are a bubble and that will explode, if you are wrong on that, you know, it can become a really bad mistake because these stocks are not trading on numbers. They're trading on narratives. Trilogy, by the way, 70%. Look at that, breaking through 1130. Breaking through 1130. I thought you were reading off ChatGPT. Yeah, that was off the dome. That's basically what I sounded like when I debated. For anyone who wanted to know what I sounded like when I was debating, that was me. And the judges would just go crazy. They're like, oh my goodness, all these big words, bro. This guy's smart. It was easy, bro. You know, in my senior year of debate, I lost a combined 4 rounds throughout the year. 4 rounds, bro. Like, my record was kind of ridiculous, bro. Like, I was him. I was that guy, bro. I really was that guy. Like, every tournament we went to, it would be undefeated, at least in the preliminary rounds, and then you have to go to the elimination rounds. But 6-0, 7-0, you know, 4-0. I just didn't lose. Like, it was quite amazing. And all of that helped me to, you know, to get to this point in my career where I can talk in front of camera sticks every single day. Or candlesticks, not camera sticks. Alexa, play Glory Days by Bruce Springsteen. 1875 on Zeta. SoundHound still at 20. Google 244. S&P still below 660. It's now kind of oscillating between 658 and 660. But it's flat there. I'm not going to be live for Powell, guys. Powell's at 12:20. I'm not going to be live for Powell, but hopefully Powell says something that helps the market go up. But we're going to see. We're going to see. What topics did you debate? Dude, we debated everything. It was actually some pretty advanced topics for high schoolers. But we debated gun rights, living wage, all this stuff, like tons and tons and tons of stuff that we would end up debating. For those that don't believe me, by the way, take a look at this. This is the Glenbrooks 2015. Look at that. Win, 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 win. 7-0, baby. Glenbrooks is the hardest tournament of the year in Chicago. It is the hardest tournament of the year. 7-0. Your boy had no L's. 7-0. And I was beating some private schools. Harvard Westlake, that school charges like $50,000 a year for tuition. Beat them. Green Hill in Texas, that school charges $50,000 a year for high school. Dude, these kids paid $50,000 a year for high school tuition. I went to a public school. So every time I went against them, it became personal. I was like, no, bro. Like, your $50,000 per year high school education is not going to beat me, bro. Like, no way. We are going to make you regret paying that $50,000 today. I took that shit personally. And so, we had to do what we had to do. Had to do it. Google 244, S&P still flat. All right, I think we're pretty much going flat right here. We're not really. Iran's trying to make a little bit of a move. Amazon from 213 to 216, but you're not getting that much more movement. Bro is really reliving his glory days. Dude, I'm going to be 28 soon. I got to relive the glory days. That was legit 10 years ago. Legit 10 years ago. Doug says, do we need to bring up my national model UN awards? That's hilarious, bro. And now you can't say Estee Ladar. Look, it happens. Debating taught me how to communicate, but not exactly how to say words. Okay, what other headlines? What other headlines do we have? Jameson Greer is going to be on at 11, trade representative for the U.S. We'll see what he has to say then. There are a couple charts on gold that I was looking at that we could potentially see. Oh, wow. Take a look at this stat. The leveraged NVIDIA ETF NVDU got $132 million of inflows last week. Wow. People really are betting 2x NVIDIA. So as I said yesterday, we're going to start to get a lot more stats on how much of the dip was bought on Friday, as a lot of these research firms start to amalgamate all the research and then they're going to put it out. So we don't have the aggregate amount of retail buying on Friday. However, we did get a stat from JP Morgan yesterday. The top 3 stocks that were bought were Meta, NVIDIA, and Hood. Meta, NVIDIA, and Hood. That's what JP Morgan said yesterday. I didn't expect Hood to be there, but Hood was there. So it shows that there's a lot of appetite to buy Hood under 140. But Meta, NVIDIA, and Hood, and based on this stat, NVDU got 132 million of inflows yesterday. Or not yesterday, last week. Interesting. So NVIDIA goes down 5% and people load up on the 2x ETF for NVIDIA. I didn't expect to see that. I thought they would pick like a different stock to go leverage long, but I guess they're doing that for NVIDIA. And then take a look at this stat right here. So total US option volume on Friday, when we had that 3% dip, 108 million. Liberation Day had 100 million. Call options, 61 million, an all-time high on Friday. So call options were cheap because the market was down. So premiums on calls went down. 47 million were puts, the second largest on record. To put it into perspective, in 2021, the record for the single largest day of option volumes in the United States was 60 million. Friday was 108 million. 61 million being calls, 47 million being puts. I mean, when you look at that type of data, and again, we're going to get a lot more data over the coming days on retail participation on Friday, but a lot of this probably was retail. I mean, you definitely had institutions that were going back and forth, probably hedging with different calls and puts, but 108 million, first of all, super bullish Hood, because, brokerages probably got a bulk of that volume. So Hood, Schwab, Webull, Fidelity, all those guys made some money on that day. But so that, the volatility was good for them. But it goes to show how much excitement there is to buy the freaking dip. 61 million calls on the first 3% down day. That means any dip, people look at the call. I mean, I bought some more SMCI calls that day, so I'm part of the problem. But like, Because once the stocks go down, your calls get way cheaper, right? Because they trade at a delta to the stocks, the underlyings, and people decide to buy into their calls in DCA. It's quite incredible. It's quite freaking incredible. But it goes to show any real drawdown, you're going to get dip buyers. At least so far, you get dip buyers that come in. And 108 million options traded in one day on a 3% down day just goes to show how much people are ready to buy. My SMCI calls are 60, 90, 2027. Those are the spreads. 60, 90 for 2027. U.S. government now holds 325,000 Bitcoin worth over 37 billion. That's a lot of Bitcoin for the U.S. government, dude. Bitcoin, 111,000. Bro, the Germans sold all of their Bitcoin, if I'm not wrong. It's all of it, right? I don't think it's half of it. I think it's all of it. At 50,000 back in, yeah, they sold all of it at 50,000 back in July of 2024. If the Germans held on to it, it would have been worth a lot more today. I still don't understand why Germany sold the Bitcoin. Like, what was the point of selling it? Like, literally, you just have to hold on to it and do nothing. It's not like they paid off some of their debt or they financed part of the country with a couple billion in Bitcoin profits. Like, they could have, like, it was so weird when it wasn't theirs. Oh yeah, yes, they seized it, but the United States also seized all their Bitcoin. We didn't buy any Bitcoin. We stole it from, it was technically, we took it from criminals that were using it for illegal activities. And so you get to hold it, right? You don't have to sell it. I mean, like, you're the German government. You get to make the final call. Like, you know, you're not a private company. So I always thought that was weird, but obviously whoever bought it from them has done much better. They bought gold and silver. Well, look, if they bought it at that time, gold still hasn't outperformed, but if they bought it in the beginning of the year, it has done better. Canada sold all their Bitcoin too? Really? They had to by law? Bro, can't the Germans just make a different law? Like, they're the government. Like, what do you mean by law? Can't they just say, okay, well, we're not going to sell? Like, again, and the argument around they have to pay off their debt. I mean, they can do plenty of things to help pay off their debt. Why do they have to sell the one asset that, like, you know, there's not going to be more of them after 21 million. And theoretically, one could argue, hey, just like, even as a moonshot, just holding on to this, like, well, at the worst, you're going to have more upside. At the worst, you lose $1 billion. Okay. Governments lose billions of dollars every single day. At the best, you know, it turns into a lot more. It was always so weird for why they ended up selling. Canada. Okay, Google says Canada has held on to their Bitcoin and they've not sold all of it, but they've sold parts of it. Same thing for Canada. They got it from illegal activities. That's how they seized it. Yes, you do have Rheinmetall, though. Where's Rheinmetall? Let's look at that stock. We haven't looked at that stock in a minute. That stock was up like, wow, 240%. Yeah, even in January, that stock was up over 50%. Look, if you've been in Rheinmetall, congrats. One could say, ironically, Trump getting elected is the reason why Rheinmetall has done well, because he put a lot of pressure early in the year for NATO to start contributing more of their GDP to defense. And I think that's also, along with a variety of other things, but that is what created at least somewhat of a catalyst to get the German defense names to heat up, all the European defense names to heat up. But Rheinmetall right there up 250%. Year to date. My grab average is 598. On the options, it's 450. On the stock, I've averaged up, it's 598. So on the 2,500 leaps I have, the average is 450. On the actual stock, it is 598. Sound down right there, 1985. That's green. And then TMQ, that is also slightly green. It was at 11 at what point as well. I'm not a lawyer, but if the laws were that the way they seized it, I imagine those are the laws that count for the seized asset. Yeah, look, like logically that makes sense. I'm just saying, if you're the German government, You can't come together and say, hey, this is an asset that as a government we believe has immense value and we want to hold it for the benefit of the German people. They're not holding it to get rich, the government officials, they're holding it for the country's treasury. Like, I don't think it's that crazy to come out and be like, well, we think we should make an exception and adjust the way we think of assets to hold certain assets. And like, obviously, you know, that asset would have done well. But again, they probably didn't believe enough in Bitcoin. So it is what it is. If Bitcoin went down, then it would have been a good sell. TMQ, yeah, that's still up 52% on the day, 992, and that is great. Okay, we have an update right here from Goldman Sachs on their earnings. We're getting a little bit more analysis on credit levels. So let's go to that, and then we'll keep going from there.
Here, calls from Wells Fargo and Goldman just wrapping up. Citi's conference calls kicking off as we speak. Leslie Picker's been monitoring it all for us this morning with some of these names going in different directions, Leslie.
Yeah, there's definitely some dispersion in response here. Altogether, though, this deal-making rebound has been a boon for bank earnings. Goldman Sachs' CEO saying on its conference call that the setup remains constructive since private equity has about $1 trillion in dry powder to put to work alongside rate cuts, which makes financing such buyouts cheaper. The firm saw revenue generated from advising on mergers and acquisitions jump 60% during the third quarter, and Solomon said the backlog is at its highest level in 3 years. However, JP Morgan executives, well, they're saying they're less persuaded that the rate cuts would, quote, meaningfully change the behavior of the sponsor community, while noting that it was the busiest summer they'd had in a long time in terms of deal announcement activity. And that's played through into acquisition finance as well. And speaking of that, there were a lot of questions this morning about the calls about credit stress following the auto industry bankruptcies of First Brands and Tricolor. JP Morgan had $170 million in charge-offs during the quarter due to its exposure to Tricolor, which Diamond addressed.
My antenna goes up when things like that happen, and I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one. And First Brands I put in the same category, and there are a couple other ones out that I've seen that I put in similar categories. So, but we always look at these things, and we're not omnipotent. We make mistakes too. So we'll see.
Of course, shares of both JP Morgan and Goldman Sachs are lower right now. JP Morgan slightly missing estimates for net interest income, the profitability metric for loan making, although revealing better than expected 2026 guidance on that metric, and Goldman posting higher than expected expenses, guys.
And I just wanted to highlight Citi, too, Leslie, because it's a winner today, and it's been a winner all year long. It sometimes gets buried beneath some of the other headliners, but business growing in all of the different segments as Jane Fraser's turnaround continues to take shape. She attributes the execution of some of the changes.
Okay, so these banks, again, there's certain metrics, maybe not were the best in their earnings, but overall pretty decent. I'm going to go through the earnings calls tonight for a lot of these banks and try to see if we can get any tidbits on kind of what exactly they think is going on in the economy. Diamond always tends to be bearish. And so, I think he had a quote this morning about where it's a bubble. I mean, like he's been bearish for a long time, but I want to know more so about the health of the consumer. So when I go through the transcripts, the number one thing I'm going to try to see is what does the loan dispersion look like to consumers? What does the payback period look like? What does the credit loss provision look like? And overall, do the bank CEOs think that the consumer is in a decent spot? Because we've looked at a lot of evidence over the past couple of weeks that the bottom half of the consumer in the United States is not doing good. They're not paying back their auto loans on time. They're definitely not paying back their credit card loans on time. Delinquencies, the whole reason SoFi fell below 30 was because of that delinquency report on Upstart. So that is one thing that I think matters. Now, again, given the banks are being on the top and the bottom, I don't think SoFi is going to have an issue with delinquencies. Also, SoFi's credit underwriting is really good. Like that's something you got to give SoFi a lot of credit for. So I expect a pretty strong quarter by Noto, but it will be important to see how all these banks are navigating this. S&P, are we still green? Wow, 661, folks. We're $2 away from recovering. Jameson Greer is going to be on in a second. I'm very curious to hear what he says. Anything that he says that is positive about China. Again, he's the U.S. trade representative, the lead representative with dissent. That potentially could be that actual catalyst that could spike us into green for the day. But it's not too bad. We're seeing a little bit of news right here. Pounter also at 180. Oscar at 22, almost Palantir. Yeah, Palantir back to 180. That's up 1.6. Grab trying to get back to 6. CoreWeave still down. Nebius still down, but Nebius was down at 125. Now it's at 130, so not down as much. D-Wave back to 40. Rigetti back to 53. IONQ back to 77. All of those are still down, but not down as much. Amcor just below 30 at 29.85. Citigroup still green. BlackRock green on the day. Navitas, is that pushing 14? That is pushing 12. Still up 20% on the day. Microsoft to rent N-scale capacity in Portugal for NVIDIA chips. Huh. Okay, there you go. More and more Microsoft licensing news with NVIDIA. Maybe that also is explaining a little bit of the green candle right there. Portugal. This data center stuff is worldwide, dude. Absolutely worldwide is what we're seeing. N-scale is not a publicly... No, isn't N-scale NVIDIA's thing? That's one of their solutions for their chips, if I'm not wrong. Yeah. Microsoft to rent N-scale capacity in Portugal for NVIDIA chips. That's one of NVIDIA's products. So that should be bullish NVIDIA. Or is N-scale... I'm thinking of a different product. Hold on. N-scale. Oh, shit. N-scale is a different hyperscaler. What was I thinking about for NVIDIA? Oh, I was thinking about NVLink for NVIDIA. Oh, I'm stupid. No, I was thinking about NVLink. That's NVIDIA's actual product. N-scale is a different hyperscaler internationally that is a private company that they're working with. Huh. Okay, so you can't trade it publicly. By the way, they just raised $400 million, this company, N-scale. I'm on their website right now. The hyperscaler engineered for AI. Dude, I've never even heard of this company, but this is the point. There are so many new neoclouds popping up across the board. They just raised $400 million on October 1st. Goodness. Reserve GPUs. Look at that. That's the button on their website. Reserve GPUs. I mean, this is why CoreWeave and Nebius and Iran and all these companies are catching a bid. There's not enough ecosystem and infrastructure for all this demand. Powell's not live yet. Powell's live at 12:20. Powell is live at 12:20. Jameson Greer should be live soon. And then we'll see what he has to say. Mike Johnson is live talking about the shutdown. But Greer should be live soon. Trump will host Argentina's President Milei at the White House on Tuesday, just days after the U.S. agreed to provide major financial lifeline to the South American nation. Okay, that's going to happen today. That might be actually pretty soon, to be honest. It looks like he'll be with Milei later today. 181 on NVIDIA. That one continues to go green. Are we going to watch the Electron launch live here? When is the Electron launch? Is that Rock Lab? Are they doing another one? I didn't even know they were doing it today. If it's live, we can take a look at it. Navitas right there, still holding on $12. Rich Tech Robotics, that one also going a bit more green. 6.4. Actually, that's red. 6.14. It was green a couple minutes ago. Now it's red. Down on the day. Oh, it's for Synspective. Okay, we're probably not going to watch it if it's 80 minutes from now. We'll watch Greer, and then we'll end it out for the day. Greer's got to give us something bullish, bro. He's got to give us something bullish. He tends to be one of the more reasonable guys when he talks about China. I don't know if he's going to move the market, but I think everyone's definitely going to be listening to him today. I didn't see the SpaceX launch yesterday. I didn't catch it yesterday, but it was a successful launch, which is good. And we did see Jensen give Elon a new chip. BMNR right there, 53. ETH just below that 4,000 level. Guys, I don't think Powell's going to say anything that's that important today. I mean, again, the market's freaked out about China and the US. They're not freaked out about interest rates, at least not right now. So A, we don't know what Powell's going to say, but B, whatever he says, I don't think it's going to be a surprise to the market. I mean, last time he said stocks are overvalued, and that kind of got the market to be on tilt. But like, unless he says something like that, I don't think it would be that bad for everybody. Hopefully not. But we're going to get rate cuts. I mean, look, the probability on rate cuts, even with this shutdown, 96.7%. I mean, it is very unlikely to me that we don't cut rates. Even Bowman today said we're cutting rates. So I don't think we're going to go the opposite direction. Felix, thanks for the super chat. Would you buy more grab spreads if you're down? Yeah, but I would buy 2028. I think you want to buy more time. You can still get a pretty good return for like the $12 call in 2028, and you have a lot of time. So even though it's out of the money, you do have a couple years, and those are the ones I would buy. Kevin, thank you for the super chat. Calvera, thank you for the $50 super chat as well. Pound to the top. Appreciate you, Calvera. Thank you for the super chat. And thank you for being here. All right, Greer, let's see if he's live. I think he's about to be. Is he live? No, he's not live yet. They're still talking to the European lady. Okay, so not live yet. We're gonna have to wait a little bit. Yeah, we saw this headline. Goldman Sachs is planning a round of layoffs. I mean, you know, I think we're seeing a lot more companies engage in that. But again, it's more of a low fire, low hire economy, as Jay Powell said a couple weeks ago. They're not hiring as much. They're also not firing as much, but there are still layoffs that are out there. LEU, that's a beast. Centrus Energy. Yeah, it's barely down for the day, dude. Again, a lot of these names pound you back to 180. S&P wants to, it did break 661 for a second. It needs a couple bucks for a full recovery. And if you get there, then you'll be green for the day. But again, rare earths, it seems like they are kind of carrying the safety part of the market. GM is going to take a $1.6 billion charge off related to their EV pullback. Did that affect their stock today? GM actually up 1%. All right, so market didn't care too much about that. Again, this government shutdown, Kalshi is saying it's going to last longer, way longer than what the analysts were predicting. So it looks like it's going past 35 days. Let me see if I can pull this up. The shutdown. LAC is flying again. Where's LAC? Lithium Americas, 7%. Again, that one was it was $4 a couple weeks ago. They're taking a stake in it, and that's what really helped it. This was Trump yesterday speaking about the shutdown.
Tends to be on the conservative side. Do you have an update on the Schumer shutdown and Democrats still continuing to refuse to vote for the continued resolution?
Look, they want to have health care for illegals that have come in. Many of these people are criminals, and they want to have health care. And what it also does is, you know, we have nobody coming in now. We haven't really locked down. If they start winning cases like this, we're going to have a rush on our border because they're going to come up for health care and the other things that they give away. Look at Newsom. Education, health care, he gives everything away. People come up for that. People come from other countries for that. So we can't have it. We have people coming into our country, but they're coming in legally.
Do you have any more meetings?
We have the strongest border we've ever had. But they are coming in, Katie. They're coming in legally through a process.
Do you have any planned meetings with House and Senate leadership on the Republican side to
figure
out
I'm
this
meeting
week?
with them. I talk to them all the time. John Thun's been great, and Mike has been great. Speaker, he's been great. Those two guys have done a great job. But we're dealing with a bunch of radical left lunatics that have lost an election in a landslide. They don't even admit that. I mean, think of it. They lost the election 2,700 in terms of counties to 525. That's where the map is entirely, right? They lost all 7 swing states. They lost the popular vote. And then they say, oh, the election was close. She says the election was a landslide. but they lie. You know, they can take any subject like this sometimes. He says, oh, no, Los Angeles is doing great. If we didn't go into Los Angeles, they would have had to cancel the Olympics. And the head...
All right, so obviously you can see still very polarized from Trump's angle. And I mean, look, a couple of days ago, the reports were that they were getting closer to negotiating with the Democrats in a meaningful way, especially around healthcare. I mean, based on the tone of what you just listened to, it doesn't look like that's happening. So I think that's why the call sheet odds went higher on the government shutdown lasting for a longer time. And, you know, as a result, we're going to have to see when this thing finally comes to a close. The good thing is the markets have not cared that much about it, but it can only go on so long. Yeah, call sheet says it's going to last till November 16th. 30% chance it lasts till November 16th. Dude, that would be way more than a month. Well, not way more than a month, but it would still be over a month. I don't know. November 16th is aggressive, bro. It's only October 14th. It's only freaking October 14th. So I guess we'll see. But again, Trump did say the troops will find a way to get paid. This is what I mean, right? Like it's like this is what I mean about the conversation around Germany, right? Like if you're the government, you can figure out a way to do something. So I don't know how he's paying the troops, but he's probably using whatever legal sources he has, different funds and mechanisms, even if the government's closed, to make sure the troops get paid. And they're going to at least not have to deal with that political backlash. But obviously it can't last for that long. They need to stop collecting taxes. That's a good idea, bro. That's a good idea. You should just forget about that part. Dude, taxes are crazy. Taxes are so crazy. Like, you have to pay them. But, like, if you don't, you go to jail. It's just wild, bro. But then again, we all benefit from taxes. I mean, you know, I'm a product of the public school system, so I don't have a problem with paying taxes. It's just like, goodness gracious, bro. Some of these numbers are getting big. Some of these numbers are getting big. Big taxes. Duke says, Amit, I'm a user of Grab. What would it take for Grab to grow to $10? Expansion to Central Asia. I just think they have to keep up 30% revenue growth. I don't think they have to expand outside of Southeast Asia at all. There's 700 million people in Southeast Asia. They have plenty of opportunity to expand. Revenue growth needs to be at 30%. Adjusted EBITDA needs to continue at 65%. If they do that by the end of 2027, they're going to have about 550 million in EBITDA, 8 billion in cash, 32 times or 40 times EV to EBITDA multiple, you get to $10. So I don't think it's that hard for them to get there, but they do have to continue up the growth. The taxes in Sweden are crazy, 57%. I mean, yeah, dude, Amir is from Sweden. And he was here a month ago and he was telling me about the taxes and he was just like, bro, it is insanity. He was like, it legit is insanity. Now, there's a lot of social services that are offered for free, which kind of, makes up for some of it, but he just could not believe how much we have to pay in taxes. S&P did get a bit of a red candle right there. You can see it. I don't know if there's any update, any news. It just lost 650 or 660. Back down to 659. But Sweden gets everything. That's true. I mean, that was how he kind of nuanced the conversation with me. He was like, yeah, we do get everything for free, but the taxes are still up there. Where is Greer, bro? They said he was on at 11. I think he's the most important thing for this market today. Like, whatever he says about China is really what's going to, I think, get the market to understand what's going on. Fear and greed, we are still below 30. Yeah, 29. We're still at 29 on fear and greed. We're still at 29. Mikkel says we do 45% in Denmark, but then most things are free. Happy with not having to worry about loading my family with debt if I were to have cancer or something. Yeah, I mean, look, the Europeans have a totally different approach to healthcare. And, one could argue it's definitely a better approach than the US system. One could argue that there's more issues with that system, given the quality of care. But at the end of the day, I mean, like, it's not even worth complaining about taxes in Europe because most Europeans have voted for high taxes. So you do have the small percentage that are super entrepreneurial, super ambitious, super like investor oriented, and obviously they're annoyed with the taxes, but the far majority of that population is okay with paying high taxes. And the United States is different. The United States, people don't want to pay high taxes. And so I think it's more of a cultural thing even than a like philosophical argument about taxes. What should I do with my 750 EOSE Jan 27 call? Well, that should be up a lot if you bought it before EOSE had a run. EOSE, wow, up another 2% today, 1750. 1750. The stock was $11 like 3 weeks ago. I mean, again, this comes down to how much you understand the company, right? Do you think EOSE has a pathway to move way beyond $17 by January 2027? Then you probably hold because you're so deep in the money. If you think that you just bought it and you kind of got lucky and you got a good strike, it's in the money, you're making a lot of money, then I don't know, maybe take some off the table. I think towards the end of the year, like as I talked about it with HIMS, right? The question on selling or trimming comes down to how confident you are holding the stock. With HIMS, I just don't care that much about it. So I'm confident selling it. And if it goes up, great, but I personally want to hold it. With NVIDIA, I mean, look, I'm up a decent amount in NVIDIA. I don't want to sell NVIDIA. I think this thing's going higher. I think if they do $11 of EPS by 2027, this is a $300 stock. And so a lot of it comes down to just the mental model you use towards the end of the year. And if you want to hold or not hold a stock. Okay, let's see if Greer's about to be on. I think he might. They're doing a little bit of a recap of the ECB conversation. And we should have Greer.
Here, we're trying.
Right. Doesn't the gold dollar discussion remind you of some of the things you've heard yourself from the likes of Ken Griffin?
Oh, yeah. It really did remind me of Ken Griffin because he pointed to the dollar weakness. Dollar's lost about 10% of its value this year as a sign that there are some questions with U.S. reliability of U.S. assets and confidence in U.S. assets. So that she did sort of echo that question. And it's just interesting that that's happening at a time when stocks are at a record high, when they're not, investors are not shunning treasuries. The 10-year yield went below 4% overnight. There's still plenty of buying of treasuries, but the cross currents are notable. And no matter how you look at it, I mean, she was pretty clear on gold, uncertainty and anxiety for the financial system. So that is out there at the same time where there's all this enthusiasm around AI and the economy. It's sort of an interesting juxtaposition and something that I think central bankers and finance ministers are going to be talking a lot about today.
All right, I think they'll have Greer up next. Again, he's the only thing that really matters now with this China headline. I think that'll kind of be it. For the day. At least until the close. What else do we have? Talked about OpenAI and Broadcom. That was a big deal. We got Palantir. We haven't watched this. Palantir, Shyam Sankar, he was on Bloomberg the other day talking a bit more about what's going on with China. I mean, it is kind of relevant given all the China headlines that we're seeing right now. So let's see what he has to say as well. I will not be live for Powell. I'm going to try to stay live for Greer. But again, guys, I really don't think Powell is going to be that big of a deal. I think people are getting super excited for it. He's just going to say the same shit, that we need to be data dependent, labor market's weakening, and that's it. Now, if he says something different, I guess we'll see if the market reacts, but I don't think we're going to see anything too different from him.
China than America, but reciprocally, no country has done more to undermine American prosperity than China has.
And you have said time and time again that we are at some sort of undeclared Cold War. Do you see at the moment this a ratcheting up of leverage ahead of, again, eventually some sort of meeting and some sort of deal? Or do you think rare earths are going to become increasingly hard for the Western nations to access?
I think it's going to spread from rare earths to many other things. We have to remember that Chinese make 50% of our generic drugs. What is it going to be like for the average American to choose between fighting for freedom and prosperity and watching their 5-year-old suffer, potentially die from a trivial ear infection? There's a whole swath of capabilities. We've so narrowly focused in the American mindset on the military dimension. Yes. But really, this is an industrial dimension. We have to remember that China has subsidized their industry to the tune of roughly 5% of GDP a year. Their businesses are not principally about competing in a fair and open market. Their businesses are about driving shutdown economics. How do I create an industrial base that's so strong that it drives the industrial bases of other countries out of business?
Your focus is and has been re-industrialization, but I think there'd be a lot of value in explaining the role Palantir's playing in that, be it, you know, from a strictly defense point of view, but you also work, you know, with the private
more than
sector,
half the business is commercial.
Right.
50 different industries, from energy and mining and pharmaceuticals. We build every Chrysler and BMW and Airbus airframe and HD Hyundai ship. And one of the real lessons here is you have to lean into your asymmetric advantages. In the David versus Goliath battle, the Chinese found more industrial capacity today. Well, what are our asymmetric advantages? We definitely have the best software as a nation in the world. We also have AI. And AI is not about AI. It's not about AGI. It's not about transhumanism. AI is about applying it towards all the other weaknesses that we have. How do you make the American worker 50 times more productive? The normative value here is to give the American worker superpowers so that you can reindustrialize, so that all the things that today we perceive being beyond the efficient frontier of being made in America can be done here. You can look at an example with Panasonic Energy and their battery factory in Sparks, Nevada. You have a 3-year apprenticeship journey to go from being someone you hire off the street, mostly in Reno, they're coming from a casino, to managing this high-end, exquisite Japanese technology. Well, with AI, that's 3 months. You know, so you can see how it drives prosperity, employment, retooling. It changes the very nature of our economy. And I reject the message that's coming up the street here from Silicon Valley, the ivory tower doomerism, that is just going to result in mass unemployment. I live on the factory floor. You know, I live in the ICU beds. The nurses are the first people to adopt this. It gives them more time to be with the patient. Or the submarine industrial parts manufacturer, where they have more time making the parts, less time munging the data to do it. I see a renaissance of how AI is actually empowering the blue-collar worker to get more done.
I want to bring us back to the headlines from the president in China, but in March you have a book coming out called Mobilize. I haven't read it, it's not out, but my interpretation is that you basically want to have some kind of national effort for deterrence. And I'm trying to understand deterrence of what?
Well, I think about it as the greatest risk to our country is not homicide. I'm not worried about the Chinese per se. It's suicide. It's that we lose the plot on what's actually happening. We're not focused enough on American greatness, that we don't believe in the need to aspire to do great things. Reindustrialization is part of that. If we're focused on moving the ball forward in this country every single day, we're going to be fine. We're not today. But I think that it's coming increasingly into focus.
There is.
All right, so you got Shyam Sankar making the argument he's made consistently for a while around this idea of, you know, American exceptionalism and how we're going to ultimately embody that ethos going into this next generation. Here's an update on Oracle and AMD. Again, 50,000 GPUs from Oracle that they'll be purchasing for AMD. And Oracle's having some conference this week as well, so I think that's why they announced this partnership this morning.
Intelligence chips to build out a new supercluster to help customers run larger, more complex AI models in the second half of next year. I spoke to a number of Oracle Cloud executives on why they decided to partner with AMD this time over NVIDIA, and here's what they had to say about why they see AMD as the right choice for inference.
I think with AMD, we've been working for so long with them that their software stack is really, really critical. And we feel like customers are going to take up to AMD very, very well, especially in the inferencing space.
Now, this is a vote of confidence for AMD. You're seeing shares move higher right now, whereas NVIDIA is trading lower. AMD is increasingly being seen by the marketplace as a viable competitor for inference. It does follow that news last week that OpenAI would be taking that 10% stake in Advanced Micro Devices. Now, for Oracle, buying thousands of chips, hundreds of thousands of chips, is a huge bet, as we know, for founder and chairman Larry Ellison, who is here. He's here in Vegas at the conference, and he'll be speaking on stage very soon. Ellison is expected to provide more details on that $300 billion deal with OpenAI and how it is fundamentally changing how Oracle is investing and what it will take for the software giant to remain competitive with the likes of Microsoft, Amazon, and Google. He's also expected to expand on Oracle's new suite of cloud offerings that executives tell me will make their cloud computing platform more efficient and faster for their customers. And then there's Thursday, Carl. Well, we will find out how exactly Oracle will fund these massive purchases of chips. That's when the company's financial analyst day kicks off. So a lot riding on this week.
Okay, thank you, Seema. Always pay attention.
That is, again, the argument for inference continues to be these big hyperscalers going with AMD over NVIDIA. And NVIDIA is really important. There's a lot of stuff NVIDIA does well, but when it comes to inference, whether it's Meta, Oracle, or OpenAI, they tend to make the argument that they'd rather go with AMD. 181 right there for NVIDIA. Amazon are removing 216. It's up a little bit. Palantir still 180. S&P kind of been stuck at this 660 level, not really recovering those final $3 to go green on the day. But at least it's not down 1.5% like it was an hour ago. Chris will be on Thursday. We'll have Macro Thursday with Chris in a couple days. We will have Technical Tuesday today as well with Jason. And we'll get some of his thoughts on this drawdown we had over the last week. I mean, pretty much everyone I talked to, whether it was Jason, Roy, Tanner, everyone bought something. Everyone, but it's not been one of the only person who I think didn't buy is Sam. Sam has been a little bit more reserved. And I think he said that when he was live with me, that he's not buying anything in this dip. But outside of that, I mean, I think Chris bought BM&R last week. I mean, a lot of people decided to just take the shot and see if this ends up playing out. All right, buying more Amcor. I already bought more on the dip at 28.50. So this one's at 29.91. I mean, it would have to go below like 27-ish to get more interested in buying, but did buy last week. Amazon 216, Bitmine 52. Archer's down 2, Joby's up 1, so those going the opposite. AppLovin up from 570, but still down on the day. And then Figma got that massive re-rating last week with the ChatGPT partnership. I mean, I don't know if it was that big of a deal for ChatGPT to work with Figma, but it was enough to pump it 15%. And that definitely helped it as well. Again, this was the short that Bitcoin whale took. It's a $500 million short, 498 million. It's the same guy who went short the day before the Trump China tweet came out. Liquidation price is 126. So, I mean, he's got some room to make some more money here. That's the cool thing about crypto, dude. You can track everything transparently because it's all the blockchain address. And it's kind of cool to track how all this is playing out, but can these guys get caught? I don't think so. It's not easy for them to get caught. Like that's part of the reason a lot of people like crypto. It's like you can do a lot of shady stuff without having. I mean, if you have a regular brokerage account and you like shorted the SPY right before the Trump thing came out, still you probably don't get caught, but it's like the potential to get caught is way easier with all the different tools the government has to like retrace their steps and find this stuff versus on a decentralized exchange where you're a blockchain address, especially if you're a brand new blockchain address. Like that account on Hyperliquid was created that day. So it's like there's no history on what they've done in the past, so you can't kind of put the pieces to the puzzle. And then boom, you can kind of do whatever you want to do. Is it amidst dad? Dude, my dad called me on Friday and he was just like, the fuck is going on, bro? He was just like, are we back to this April tariff nonsense? I was like, yeah, kind of a little bit, but it's not that big of a deal. But my dad wasn't that upset about it. He was annoyed. He was just like, why is this happening? But he wasn't upset. And 5 months ago, my dad would be freaking out. I think my dad was like 30. He was down like 30,000 on Friday. And he was really, he was chill about it. He didn't care that much. So he's grown a lot in terms of just like being able to emotionally handle it. My sister didn't even text me. I don't even think she noticed. And my mom, I was texting her. I was like, yeah, don't worry about it. My mom's traveling right now, so she couldn't keep up with all the news. Like, hey, your portfolio is probably down right now. Don't worry about it. And she said verbatim, she said, I am not worried at all. I wish I had more money today. LOL. Full on buy the dip. Full on buy the dip. All right, Greer's live. Here we go. Let's see what Mr. Greer has to say. Let's pull this up. Let's see if they give us any clarity about what we've got going on with China.
Would suspend their controls on rare earth minerals. Last week, the Chinese decided to re-expand their controls on rare earth minerals.
Out of nowhere?
I would say out of nowhere. Yeah, that's right. I mean, there's always some level of dramatics to it, where they will, if we take measures, little measures here and they'll threaten to, bring down, hellfire and things like that. But this is something that is completely disproportionate to any measures that the U.S. has taken.
I was going to say, they would probably say, well, you're doing this on semiconductors.
Oh, well, I mean, listen, every country has very specific export controls that are product specific, company specific, sometimes country specific, and it's on things that are very high tech. What the Chinese are doing is broad. It's on the whole world, a broad range of products that contain a tiny 0.1% of it is rare earth materials. And they're doing it to low-tech stuff. The rare earth materials here, these are things that the United States pioneered 60 years ago. It's basic materials that they're trying to control.
But we need that, don't we?
Everyone needs that. Everyone needs that. And guess what? The Chinese need other people to buy products that contain these things, iPhones and computers and all of this. So they're really shooting themselves in the foot by doing this.
So what happens now? I mean, we heard from the president before the weekend. He sounded very angry in his post, 100% tariffs, threatened the meeting with President Xi, and then things got a lot calmer Sunday night after the weekend, where he said everything's going to be fine. What changed?
Well, first you saw the Chinese realize they overstepped, and they started to qualify some of their statements right out the gate. And then, of course, the president's resolve remains the same. We can't accept this kind of regime that they're proposing. But obviously, the president's a deal maker. Scott Besson and I have been talking with the Chinese, and we've been pretty successful in finding a path forward with them in the past. So we think we'll be able to work through it. But again, we can't have a situation where the Chinese keep this regime in place where they want to have veto power over the world's high-tech supply chains.
Have you been in discussions with them? Like, how recently?
So we had at staff level, senior staff level, we had folks talking yesterday here in Washington.
And what was the outcome of that?
Well, part of it was, the Chinese wanted to have their say and try to explain why they were doing things. There was a little, there's some conflict in what they're saying. On the one hand, they'll say, well, the U.S. has taken so many measures against us in the recent years, we had to do something. And then on the other hand, they'll say, well, we have the sovereign right to do this. We need to control this for national security purposes. And you can't really have it both ways. Either you're trying to retaliate against us or you're trying to do something that you believe is legitimate. You can see them trying to find narratives that make sense because the whole world understands what they've done is completely out of proportion and unacceptable. And so they're trying to find a narrative that works for them.
But do you have any indication that they will backtrack?
Well, I mean, we will just have to see where that goes, right? I mean, it's hard for them to find an off-ramp at this point. I think they have realized that they've overstepped. And like I said, President Xi and President Trump have a good relationship.
You think they've realized they've overstepped? The statement just said, if forced to fight, China will fight to the end.
Right. And if you look at their statement from a morning or two ago that they put out, they were very careful to say, well, we don't want to ban everything. We're trying to do something that makes sense for everyone, and we think it will have a little impact. I mean, first of all, we have to be very clear-eyed about this. I think it's a problem to have the program at all. But you can see by some of that language, they're starting to realize they need to find a different pathway.
What about the 100% tariffs? Is that happening on November 1st?
Well, or sooner, right? That's what the truth said. That depends. I think a lot depends on what the Chinese do. They are the ones who have chosen to make this major escalation. And like I said, our agreement was we're going to keep our tariffs low if you keep the rare earths flowing. They're now saying that they're going to control more rare earths and downstream products. And so it makes sense that we can raise our tariffs.
But does that strategy?
Okay, so all of this has to do with rare earths. I mean, I think Greer is being pretty reasonable here. He's saying, look, we said we would keep our tariffs low as long as they kept the rare earths flowing. But this escalation, which they kind of realized they went too far on, and that's why they had to pull back some of their statements on Saturday night, that is what's causing us to escalate our tariffs. And so, I don't know. It doesn't seem like the U.S. started this fight. It seems like China kind of went haywire over rare earths, and that's why the U.S. is responding the way we're responding right now.
Strategy of threatening and raising tariffs on China work? Because China, unlike some of these other countries, has leverage, and it has leverage in the form of these rare earth minerals.
So we found that it does work. So back in April and May, when we had tariffs of about 140% on the Chinese, this was very challenging for their economy. Their economy right now is export driven. They had, their property values are down. They have all the infrastructure they need and more. They have super high youth unemployment. They need to export their way to keep growth, and that means shipping to the world's largest consumer, the United States. So this is, when we had the high tariffs back in May, they came to the table because of that. We were already talking yesterday. So both sides have leverage. We're very confident. And I'm just talking about tariffs. We have our own export controls we could impose if we needed to. We have things that could really be painful, but that's not what we're trying to do. We're trying to have a good relationship with the Chinese, and so we need them to change their approach on
What
this.
are you trying to do? What does a good relationship with the Chinese actually look like?
So from my perspective, with the Chinese, we have a totally unbalanced trade relationship. We have a giant trade deficit that's built up over years because of unfair trading practices. So my view is we need to have more balanced trade with the Chinese. It probably needs to be a little smaller, and it needs to be in non-sensitive goods. And there are things we can do, right? We should be selling them ag and medical devices and aircraft, and we should be buying things from them, consumer goods, low-end tech. There are areas where we can and should be trading in a freer kind of way. But the U.S. is not the only agent here. China has to want to do this. They want the old deal they had, which was totally unfettered access to the U.S. market while cutting off U.S. access to their market. And we're not going to have that anymore.
So if the goal is to keep buying from them consumer goods, I guess you're talking sneakers and toys, things we just don't make here. Yeah. Why put tariffs on those products, which do risk to increase the price for Americans?
Well, first of all, we make some of those products here. We make them, and other trading partners who are more reliable make them as well. So there are other sources for these things. And actually, we've had tariffs on the Chinese since 2018 when President Trump first did it. And we've seen a lot of diversification in sourcing. Our trade deficit with China just this year, in the past 6 months, has gone down by 25%. So we're already less dependent on them now than we were 6 months ago.
Right. So are President Xi and President Trump still on track to meet this month?
So right now, there is a plan. There's a scheduled time for that.
There is. It's on the schedule.
There's a scheduled time for that. Whether it'll go through or not, I don't want to pre-commit either ourselves or the Chinese. But I think it makes sense for people to talk when they can.
Was the president worried about the market reaction that we saw on Friday after the ratcheted up tensions?
I mean, listen, we always watch the market. We watch the bond markets. We watch everything. We're really focused on the long-term success of the U.S. economy, which means reshoring supply chains and having stability in our relationship and not being dependent on China and others for critical, sectors. But of course, we want to make sure that the market is also, responding to appropriate information, right? And so I think you've seen the market settle out this week as they realize that the president and his team, we want to work with the Chinese.
And finally, just in terms of your own responsibility as the trade rep, I mean, because we see the Treasury Secretary in this administration involved in trade talks, the Commerce Secretary, Howard Lutnick, involved in these trade talks. How do you guys divide up the discussions and then the implementation?
Sure. So when it comes to what I would call pure trade issues, which are tariff lines and non-tariff barriers overseas on our services and investment, all kinds of things, the Office of the U.S. Trade Representative, my agency, we have the statutory authority. We're part of the White House, and so we lead on that. Obviously, I work quite closely with Secretary Bess in a variety of situations. China's a good one because there are macroeconomic issues that tie into the trade issues, so I work with him. Secretary Lutnick is very focused on promoting U.S. exports and investment in the United States. And so he's a great partner when we're dealing with some of these developed countries, Japan, others who want to invest here.
Today, actually, the tariffs go through on lumber and kitchen cabinets and all of that. Are we going to see more tariffs and new categories coming?
So again, this is an area where the Secretary of Commerce has some authority under Section 232. And so you saw some of those tariffs go into place today. We have the semiconductor tariff program. We have the pharmaceutical tariff program. The president has done a lot of signaling on that he wants to see he wants to see more investment in the United States for those things, and that's a pathway to not have tariffs, right? The point of those tariffs is to reshore supply chains, and we see that happening with pharmaceuticals and semiconductors. But you may see in coming months, reports describing the status of those investments, and if there's a tariff needed, what that might look like, how that might be phased in.
Well, we certainly appreciate you joining us and giving us all the information, especially on China, top of mind for the market right now.
For sure.
It's good to see you, Ambassador Greer.
Thank you very much.
Jameson Greer.
Okay, I think that was kind of bullish. Markets are reacting positively. S&P is only down 0.22%. Look at that green candle busting through 661. ASTS 95. BM&R almost back to 54. SoFi about to go green on the day. Grab about to hit 6. Bitcoin, look at that, 109 to 112. Not too bad on Bitcoin. Google goes green at 246. Oklo still green. Oscar still green. Nvidia gapping up to 182, 182.50. I mean, Iran at high of days, 67, 66.5. I mean, it seems like whatever he said was pretty bullish. So what did he say for a quick summary? Number one, he said the Chinese escalated dramatically over the weekend, which is why President Trump responded. Number two, he said the Chinese overstepped their boundaries, which is why they pulled back some of their statements. He's right about that. The foreign ministry kind of pulled back their tone on Saturday night. And then number three, he said 100% tariffs are still on the table. It could happen November 1st or earlier, but we have, his exact quote was, we have a lot of leverage, even if they do, and we are not afraid to use our leverage. And as a result, you are, I guess, seeing the markets basically react with, hey, the administration has it under control. The administration has it under control. At least that seems to be the perception. Look at Oracle breaking through 300. S&P is very close to green, folks. 662. We are $1 away from breaking green. $1 away from breaking green. I think the reason the market liked that is, and this is just my interpretation of it based on what I've heard over the past couple of days and based on listening to Greer. I think the market got really upset on Friday because they thought Trump was getting into an unnecessary trade war again with China. They saw tariffs, the algos went crazy, you had a 3% sell-off. I think Greer just said, dude, we had a deal with China to keep the tariffs low and for them to keep the rare earth metals flowing after Liberation Day. And for some reason, on Wednesday and Thursday of last week, they completely reversed and started issuing these random export control bans on rare earth metals across the entire world. And we started getting notices from a lot of our trading partners that China was being aggressive. And that's why Trump stepped in and said, hey, like, this is not acceptable. And we're ready to kind of increase the deal that we had of tariffs going up from, I think it's like 50% or 40% to 100% if this continues. And I think the market's basically saying, okay, so it wasn't really Trump's fault to get that aggressive with China in the most recent debacle that they've had over the past 72 hours. It was more so China escalating. And as a result, Trump is just responding, which means if China eventually pulls back what their initial escalation was, the US should pull back. There should be no need for 100% tariffs. And as a result, things go back to normal. I think maybe that's how the market's interpreting it. MP just went green at 95. And as a result, I think basically the market's saying, yeah, this is probably a nothing burger. It probably gets resolved. And look, if China didn't pull back some of their statements on Saturday, maybe you'd say China could escalate it. But China clearly said, we don't want to get into a trade war with the United States. And although they're not easily capitulating to exactly what the United States wants, it doesn't look like it's going to easily escalate to some massive issue like we had back in April. Like, I feel like it's just hard to believe that happens because of rare earth metals. And by the way, Greer said the one thing that is the elephant in the room, which is that China doesn't have the domestic consumption of any meaningful products to help their economy, which is why they've been in a recession over the past couple of years. So they need the US to get the rare earth metals from them so we can make the products that are necessary for the Chinese government or for the Chinese economy to survive, because, you know, they need our consumer. And I guess the market's saying, all right, so then it's not that big of a deal. S&P 662, 90 cents away from going green. Amcor back to 30. ASTS at 94. Iran trying to push 67. Navitas up 23%. Grab at 595. Ethereum, are we back above 4,000? We are back above 4,000. Not too bad. Oracle above 300. Meta was at 695. Meta's at 714. Not too bad. Look at that green candle right there. And then Google trying to get right back to 250 as well. I don't know. Those are my thoughts. We got to see. We got to see how this plays out. Obviously, you know, during Liberation Day, Trump declared a trade war with the entire world, and the market digested that. We had a 30% drawdown and we recovered. Over the past week, this feels like it came out of nowhere with China increasing the level of intensity on these rare earth export controls. And as a result, Trump's response got interpreted as a form of escalation, but maybe Greer calmed the market down. You got a pretty big green candle on the S&P. I think the market's kind of calmed down on the idea that it's some massive escalation being initiated by Trump, but rather it's just a response, and that response likely gets a cool down from both sides. Potentially. We're going to see. But so far, this is what it's kind of looking like the market's responses to this. Clean Spark at 2150. That is green. Dow's up 100 points. The NASDAQ's also catching up. The Qs, look at that, 599. They were at 608 last week. So that getting above 600 would be nice. And then the S&P is 65 cents away from going green on the day. Can we do deals with other countries rather than China? They are such a nuisance. I mean, we do a lot of deals with other countries besides China, but at the end of the day, we can't decouple from China. China still is responsible for a far majority of the products that we sell in the United States, which is why the market reacts so intensely when it's like, if we were having this rare earth issue with Vietnam or Thailand, like the market wouldn't give a shit. But because it's China, and they're not just the United States, they provide 90% of rare earth metals to the entire world, which is why, you probably saw Trump taking it so seriously last week. That is why the market cares so much. And so there's going to have to be a conclusion to this, but at least for now, the market's looking like it's not as big of a deal as they thought last week. But we're going to have to see how this plays out over the next coming days. 662.67, 30 cents away from going green. I want to stay and see if we can get that final little bolt on the S&P to go green for the day. It would be pretty cool to see. But then we will have Powell speaking in 30 minutes, and we'll see whatever Powell says. Hood above 140. Wow, yeah, you're getting the entire market. I mean, dude, it had to look. Whatever Greer said, whether you agree with him or not, we did not get these V shapes getting basically back to intraday highs if it wasn't for Greer. Whatever he said was enough to get the market to not worry as much as they were. Even Amazon pushing back up to 220. Amazon was at 210 today. So it looks like Greer, to an extent, at least calmed down some of the markets. Oklo still moving. Are we past 180 on that? 178 on Oklo. ASTS, massive move. Congrats if you're in ASTS. 95. That's up another 5% on the day. And then the S&P has 20 cents to break green. 20 cents to break green on the day. Yeah, BMR 54. Look at that. 8 cents on the S&P. If it breaks 663, everyone who voted green on that poll that I put in the chat in the morning, you will be correct. Dude, a 1.5% drawdown to green is not easy. Oh, wow. 63% of you said red. Okay, so the majority of people actually said red. And we could still end red for there. Wow, 663. There you go. 663. Didn't fully break through. I think 663.07 would get you a full green for the day, but you're talking about a 0.02% day on the S&P after we were down 1.5%. That is pretty incredible, dude. I mean, yesterday, obviously, you had a big move from the rebound on Friday, but for us to lose all of that today and then get all of it back in the span of 2 hours. Now, again, we still have 4 hours left, and we'll see how it plays out, but that is not bearish. Doesn't feel that bearish. We do have Powell, though, so we're going to have to see what Powell says as well. All right, guys, that's it for me. I'm out. I wish I could stay for Powell, but I really do got to go. We'll cover it on the market close. We'll see what we've got. Again, I don't think Powell's going to say anything that's going to be that important, but he doesn't even have any data. Like, the government's shut down, so I don't know how much he's even going to be able to talk about anything in a meaningful way. But we'll cover his comments on the market close, and we'll see if he says anything that changes the market. Word of the day, placate.
Placate.
To appease or to pacify. I think Jameson Greer's comments definitely placated the market. I mean, when he talked, we were at 659. After he talked, we're at 662.70. So definitely does feel like he brought a little bit more calmness to the market. And that's what we got going on. Siege, thank you for the $20 super chat. Appreciate you, Siege. Thank you for being here. Also, by the way, thank you, everybody, for watching. If you did the daily recap, that show is back every day around 7 p.m. Eastern. Daily recap, 15-minute episode, 5 stories, 3 minutes each. So for those that don't have time to watch the market open, market close, we'll have that daily recap every single day, Monday through Thursday. It's been gone for 5 months just because it's been super busy, but I'm happy to bring it back, and we'll have that back every single day. So we'll have another episode today, and we'll talk about all this China stuff. We'll talk about Jay Powell's comments as well. on that daily recap. All right, that's it for me. Thank you, everybody. Appreciate you all. Technical Tuesday. We'll be live on Tuesday. Jason will be on at 4:20, and we'll get through all the technicals and see what he's thinking about how some of these charts are looking out. Thank you, everybody. Appreciate it. See you guys on the market close. Bye, everybody.